Very good morning, delegates. Welcome to today's one-day seminar on bank audit series. Requesting delegates who are seated on the back to come and occupy the front rows. We will start today's proceedings with the invocation of ICA motto song. Let us all rise for ICA motto as a mark of respect to our mother institute.
Yaesha sukteshu jagrati Yaesha sukteshu jagrati Kavam 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 Purusho nirvimana nirvimana Adeva shukram brahma Tasmin lokah sarve tanunatyadi kashchanatyadi kashchan etat dvaita etat dvaita etat dvaita etat dvaita etat dvaita etat dvaita.
Thank you. May now request Ayampalayam Immigration Bureau Secretary SCRCFIC to formally welcome the gathering.
Good morning to all. So today's Chief Guest BBS Moni sir and other speakers and members from industry and other members from bank. A warm good morning to one and all present here. Today the entire scenario of banking is changing towards technology, so that we want to have sessions especially for banking industry, especially in the month of as informed by our Assistant Secretary Raghuman sir. Normally bank audit series started in the month of March only concentrating on our statutory bank audits. But this program is structured in a way that, so we want to include the new age banking. Normally we concentrate on only the old age banking. They have their own process method to do the processing and other things. So we want to have some different kind of exposure to our member, since the new age banking is taking almost a bigger market share in our country. So that we structured this program towards finding the frauds in early stages through machine learning. That is one of the expert in forensic audit and other things, Anand Jangid sir from Bangalore. The second program, even though the old age banking still is surviving compete with the new age banking, the concurrent audit is the major source for the income of many of the chartered accountants in rural and as well as even in some newly started practitioner in urban also. In that scenario, the using manpower is a big trouble for them. So for the entire day they require 15 days, 30 days, there are conditions in while allotting the concurrent audits. So that through automation we are able to reduce that manpower. So especially all the practitioner, especially MSME practitioner, is going to be struggle with the manpower within next 2 to 3 years because of there are a change in our curriculum and other things. So because of that, there may be a lot of scarcity for the manpower we may face. So that in that, to equip ourselves to upgrade through the automation of concurrent audit, definitely it will save your time and energy, everything towards that audit. For that we will have one session towards that. Second, underwriting. Normally this word underwriting is used only in the new age banking. Credit analysis and underwriting is used in new age banking. So that one of the expert from Kochi, he is working in SBI as an VP for some time, so he's having a good exposure in underwriting and other credit analysis and process of that, so that we mingle with that, we have this program. I think definitely it will help you in your profession, both member and non-member, both of you. So, and also I thank our today's chief guest sir for accepting our invitation. We have planned this program in the month of January itself, or even we discussed this thing from December onwards. Due to some unavoidable thing, it is now we are able to conduct this program. And I welcome you once again. I welcome you all for this one day program of banking series. Thank you all.
Thank you very much, Arun sir. Let me introduce the chief guest for today, Mr. BBS Moni. He is presently the regional credit head of HDFC Bank. Moni sir is a chartered accountant with 25 years of post-qualification experience, majority of which is in financial services industry. He has worked with companies like Cholamandalam Finance, Murugappa Group, GE Countrywide and HDFC Bank. He has also practiced the profession for some time in between. With this brief, I welcome BBS Moni sir to deliver his inaugural address. Before I hand over the podium to sir, may I request Arun sir to present him with a shawl and a memento as a token of our love and affection. Over to BBS Moni sir.
Is it connected? Yeah. Sure. Very good morning to all of you. It's my privilege to be here this morning. In fact, I used to roam around here as a student a few years back. So to even stand here, it requires a certain blessing from the Almighty. Because that's the kind of wisdom which is filled in this hall. All the seniors in this profession. I don't want to name them because naming will be a futile exercise. So many distinguished professionals have done their address here in this podium. I am no way comparable to the kind of expertise they have in the profession. So I thank the Almighty. I thank all my gurus who have contributed to this kind of opportunity. Now I want to talk about Mr. Arun, C.A. Arun. I know him for the last 20 years. Okay, he has been a fantastic, positive, high bundle of energy, I put it that way. He is from humble beginnings in a upcountry market in Tamil Nadu. And now he is here as a secretary of SIR-CICAA. We should clap for his journey. I'm sure time is not far when he will sit in Central Council of Ministry. That's the kind of aggression, that's the kind of positive energy that he has shown in any assignment that he takes up. In fact, he is associated with our bank as a senior vendor from 2004 onwards. He is our associate from 2004 onwards. So, hats off to him. I want to thank Mr. Panna Raj. I have not met him. So I want to thank him also for this opportunity. I also want to thank and welcome Mr. Raja, Mr. Ratnagiri, and Mr. Rajesh, who are going to address Anand, who are going to address today in the subsequent sessions. So on that note, I thought I will just touch upon the transformation or the journey in the banking space. So this part of the audience who are sitting here, they are from the same bank. I don't know about the others. There are so many seniors also. I would just like to touch upon the fabric of transformation. When I entered the profession, I was doing underwriting for all these retail products. So I got a two-wheeler application with me. Customer wanted some TVS 50 or very small two-wheeler. Now the two-wheeler applications go up to some 25 lakhs, 30 lakhs because the kind of transformation that has happened on the two-wheeler industry is so high. BMW bike costs some 30 lakhs, right? So I am talking about some 25 years back when I got this application. And it came with a balance sheet, profit and loss account, bank statement for 6 months, etc. I was stunned. Why should somebody give a balance sheet for applying for a two-wheeler application? I coolly referred this to our chartered accountant in that location. And it turned out to be a fabricated balance sheet and profit and loss account. The kind of frauds that happen while you get the retail applications is humongous. Even today it happens, but it happens digitally. Earlier it was physically happening, now it is digitally happening. That's the transformation. So, in this profession, the application of mind, the presence of mind is what is important. If you are a budding banker, if you aspire to be a banker, the presence of mind is what differentiates you from the rest. The commonsensical approach is what is required to be in this profession. It's a fantastic profession. I again go back to the old days when there was no bureau, there was no CIBIL, there was no Equifax, there was no Experian, nothing. It was only a reference check to be done by the credit manager. So I joined one organization that was SME lending at that point in time. And that point in time, the ticket size, if it is a 10 lakhs application, 15 lakhs application, it was supposedly the high value transaction. Now we do SME of 1 crore, 5 crores, 10 crores, etc. Right? That time 15 lakhs application itself was a fantastic high value transaction. So I get this application, and that too from one of the main channels in a city. When I say channel, he is a sourcing channel. So there are two arms. One is the sourcing arm, the other is the underwriting arm. And the subsequent arm is basically the disbursement and the operations part of it. So this sourcing arm or the sourcing channel has given a high value application. We do discrete checks in the industry. We call up other banks, other NBFCs, whether you got a similar application. So I do that. I call up somebody in the industry and check with them whether from the same customer have you got the application. He says, yes, I have got another application for 15 lakhs. So which means the customer is scouting for 30 lakhs of loan amount. He has applied in 2 institutions. So then I do one more thing, one more step I go by asking him what are all the logins or the applications given by the same channel in the last 45 days with the competition. So he gives me 10 names saying that these are all the 10 applications I got from the same channel. When I look into my login details, the same 7 or 8 applications are common in nature. It's the same customer applying for multiple financial institutions. So it is a leverage. The customer is becoming highly leveraged at that point in time. Is there a tool to address that kind of leveraging or that kind of parallel logins, as we call it in the industry today? Is there a tool which existed at that point in time, say 20-25 years back? The answer is no. It was completely manual. It was completely manual. No other option other than to check. There was no WhatsApp group also. Between the credit managers of the industry, there was nothing. You need to essentially make a landline call to the other guy and check with him whether you got the same application or not. And thereby compute the leverage or the DSCR or whatever. Now you have a bureau. CIBIL report tells you that so and so has applied for 6 loans in the last 30 days. And then it is for the underwriter to probe into it, where he has applied, etc. So I'm just giving you some touch points of the kind of transformation that has happened in the industry. So we are in a hockey stick movement, so to say. We are in that kind of a position right now. So I request all the young professionals of the chartered accountancy professionals who are aspiring to be bankers, to have an aspiration to learn on a daily basis. I was just speaking to Mr. Arun some time back. As a practicing chartered accountant, it is essential that you keep abreast of what is happening on the industry on a day in, day out basis. Similarly, if you are a credit professional, it is imperative that you also upgrade yourself on what is happening in the industry. And I think hats off to the Institute, Arun and Mr. Khanna, basically for organizing this kind of a seminar. I'm sure next time around we will have more participation, the chairs will be filled up. So this is a profession which is evolving, this is changing rapidly, technology is taking over. So I'm just trying to cover some of the aspects. I'm sure the other distinguished speakers today will cover all these points at a very great detail. But I thought it is important to touch upon the context, set the context for the day. It's a very unique industry. Our banking industry is an extremely unique industry. It is instant gratification versus delayed gratification. What do I mean by this? Instant gratification versus delayed gratification. You sing a song. Suppose I am going to sing a song right now. I get instant gratification. Whether you will like it, then you will clap, otherwise you will walk away. Have you seen Ilayaraja's program in Chennai? So many programs happened. Some 15-20 years back, one program happened where Yesudas was singing. Packed audience. It was a Tamil song called Poove Sempuve. You might have heard it. It is there in YouTube. It's full orchestra and all those things are there, right? Ilayaraja is basically giving directions. You know the singer, no introduction required. Mr. Sri K.J. Yesudas, Padma Vibhushan. How many songs he has sung for the country? So the song reaches almost 40%. There is an error committed by Sri Yesudas on stage. Instant gratification. People did not dislike the error. They started applauding the error. Second time, 50%, 60% on the song. Again one more error. By then Ilayaraja becomes furious, but he calls him Anna. Right? He calls Yesudas as Anna. So he can't show or reflect that on the stage. So what he does, Yesudas then realizes that he has committed a mistake twice. He returns to the orchestra and says, I will sing the song one more time. The entire crowd starts clapping. And they really lived that moment. They really relish that moment even today. I relish it because I am a fan of Shri Anand. Why I am saying this here today is, as an underwriter, do you have instant gratification or delayed gratification? I am just trying to relate this point to the profession. There is no instant gratification if you are approving a transaction. That's what I wanted to say. If you are approving a transaction, is there an instant gratification for you? No. For the organization? No. Over a period of 5 years, you will get the gratification in piecemeal. Whereas, if you are rejecting the application, it's an instant gratification. It is not easy to reject. Please note, it is not easy to reject an application. If you reject an application, there will be 100 times you need to justify your decision to the business team. They will keep on coming at all hierarchies. Sales manager will call you, his boss will call you, his boss will call you, and the national head also will call you. Why you are rejecting this application here? Right? So, it is not an instant gratification, basically, if you approve a transaction. Approving is also very difficult. You need to have the presence of mind. You need to have the industry outlook. You should know what is the cash flow of the customer. You should have met the customer. Either you or your agency should have met the customer. You should have the KYC in place. That is, know your customer. If it is a rejection, it is an instant gratification. Because you have done your job. So, it's a very intricate situation that the underwriter goes through on a daily basis. He or she should have maturity to undergo this, because the proof of the pudding is your portfolio quality. When I say delayed gratification, that's your proof of your pudding. You have created an asset, you have created a portfolio. How that portfolio is behaving, what is the NPV of that portfolio, what is the write-off, loss ratios, etc. will be known only post a decent vintage. That's what I mean by this point. This is a very important one. Its country is becoming extremely large, and it is becoming, the financial products are reaching to the nook and corner of the country, and therefore the reach of the products is there across the country, and therefore you should have the bandwidth to cater to the entire country. So you should know what is happening in Kollam, in Kerala. You should know what is happening in Marthandam in Tamil Nadu while sitting in Chennai. And not only Tamil Nadu, Kerala, it can come from East also. Probably the underwriting is centralized. You are sitting in Chennai, you are underwriting an East file. Possible. So you should know the entire breadth and the breadth of the country, length of the country. You should know the nuances of each geography, and therefore equip yourself on the economy which is prevailing in this geography. That's what I mean. Semi-urban and rural markets. It is called as SURU markets. SURU. Semi-urban and rural. NTC factor. What is this NTC factor? New to credit. Customers who have never applied for any credit products earlier, they are applying for a loan. How do you evaluate them? For a bureau guy, for a customer having a bureau footprint, it is easy. He has a CIBIL score, he has whatever, right? How do you gauge a new to credit customer? So this is again like, it is akin to evaluating pre-bureau stage, when CIBIL did not even exist. How do you do that? What are all the parameters that you look into a new to credit customer? He may have a X stability, resident stability, his parents might be still earning, probably retired, he might be working in a super Cat A company, he might be self-employed with a decent vintage, but he has not availed any loans or credit cards so far, and therefore he is not having a CIBIL score or whatever. It's a challenge. So, the acumen to evaluate new to credit customers is the need of the hour. That's what I. Predictability of cash flows. It's a very, very tricky point. How do you evaluate the predictability of cash flows? Do you know the industry trends? How an FMCG is behaving? How rubber industry is behaving? How the agri industries, how agri products are behaving? What is the supply and demand situation? Because you approve a loan today, whether for a 10-year loan, what is the probability of default in that particular transaction? That's all linked to the predictability of cash flows of that industry. So the underwriter should know to equip himself or herself with the capability to evaluate various industries. And a budding underwriter today should not aspire to become a corporate underwriter. When I say corporate underwriter, wholesale underwriter, he or she should not be saying that I will underwrite only 1,000 crores loan applications. It's a step-by-step progression. You should know how to underwrite retail, you should know then how to underwrite the SME segment and then go to the corporate segment. So we get a lot of aspiring candidates just out of college saying that no sir, I want to be in wholesale credit. Okay, next question, what is CIBIL report? Sir, CIBIL, I have heard this but I am not very sure what is CIBIL. Right? So you cannot be both. You can aspire to be a wholesale underwriter, but you should know what is corporate rating, what is cash flow analysis, what is Ind AS, what is IFRS, all those things you should know if you are a corporate underwriter. Right? That's the dichotomy that is there existing today. Keeping pace with disruption. This is extremely important. Every day new things are coming in. It's a highly regulated market, extremely regulated market. Industry is so regulated. RBI is doing everything possible. You might have seen what is happening in Paytm today, right? Every now and then RBI will check each and every bank. There is a very constant engagement with the bankers. There is a bilateral engagement. I will say continuous and bilateral engagement which is happening with the bankers and the regulator. When they feel that the bank is not complying to a certain process, they are just giving some blank statements, they are not actually implementing what is expected to be done on the ground, then they will intervene and they will give direction to the bank, they will give timelines to the bank to set it right. They will observe whether the timeline is actually met, whether the regulatory compliance is in place or not. And if there is no complaints after that timeline, then they will start putting strictures. They will say penalty. They will say this license itself will be cancelled. They have done it in so many instances. You might have seen GTB, long time back, GTB episode. Every bank, no bank today which is existing today has not gone through some kind of penalty from RBI. So they are ongoing basis, they are evaluating everything and they have a robust mechanism to track. I think thanks to the regulator, our banking industry is in a good shape today. I would like to thank the regulator on this August audience, in front of this August audience. Fantastic job they have done. Our regulator today ranks one of the best regulators in the world. So we should thank our regulator. Need to keep it simple. Every bank comes with some kind of an innovation or the other, but the customer journeys become so complicated. As a customer, we experience it, right? Every day we experience our digital journeys. You book an Ola, you book basically a book my show, you go to a movie. Everything is on app now. Similarly, bank has created so many customer journeys. Is it simple? Is it user friendly? Does the customer understand what he has to do? Need to keep it simple is extremely important. Some banks have complicated it. They've got multiple journeys. They don't have a single app. Okay? They've complicated it. So every bank has an IT cell. They have a CXO. They have a UA UX expert on their panel. When I say UA UX, it is user experience and user interface, UI and UX. Okay? They have all these things in their panel, but they are not able to deliver the final simple product to the customer. It's very complicated. That needs to be simplified. Advantage of first right of rejection. What does it mean? You have a plethora of customers in front of you. If you bifurcate them based on their scoring, when I say scoring, their bureau scoring, their banking behavior, their cash flow footprint, etc., they fall into various buckets. The less risky, the medium risky, the high risk customers, right? Are you getting the least risky customers in your portfolio? Are you pricing them right? These are all the questions which will come to the banker. Is there a risk reward matrix? These questions should be known to the underwriters. That's what I do. Managing the expectation of Gen Z. What is it? What is Gen Z? Anybody?
So the latest generation, sir.
Latest generation, which means those who are born after 1990. Those who are born after 2010 is called Alpha. So those who are born after 1990 will be working in the organization today. Some of these young people here are Gen Z. What is their expectation? Every family will have a Gen Z. Right? Every family will have. Most of the students here are Gen Z or Alpha. So basically the question is, their expectations are different from the rest. I'm not, for a moment, don't get me wrong, I'm not criticizing them. Their expectation in terms of settling down in life is different from the other generations. Generation X or whatever. They don't believe in buying properties, they don't believe in having fancy cars, they are not interested in taking loans and saying that yes, I am now settled. They want to spend on foreign holiday. They want to spend on something else. They want to have a fantastic blazer. They want to feel good. Whereas Gen X will be coming in lungi also. I'm just saying, okay? That's the difference. Expectations are different, and as a manager or a supervisor, it is your responsibility to address Gen Z. Okay? And this is causing attrition also, because they are not being heard. The listening skill is not there with your supervisor. Because of that, people are leaving. Every bank is having some 20-30% attrition. Sorry. Loyalty factor, that's what I meant by the loyalty factor. Loyalty factor is coming down. The average vintage in an organization is not more than 3-4 years now. Earlier, our parents used to retire in the same organization. They will join in 18 and they will retire at 60. That is not there now. If you are working in 10 years in an organization, people will start looking at you, boss, this guy is not up to date. He is not having aspirational value. He is becoming stagnant. Right? That kind of a template is attached to longevity in employment. Now this is something which we already know. What is this? What is this transformation? Physical files versus digital files. When we started underwriting, every day morning this runner boy from our vendor will come and keep 100 files on our desk. Nothing was there. It was just a credit approval memorandum prepared, and that's about it. You figure out. You go through the balance sheet, you figure out, and then take a decision. Now it's all digital. In this room, I'm sure nobody is looking at physical paper and decisioning. It's all digital. Or image-based. Image-based is different from digital. Digital means you are extracting the information from the source There is no value addition in terms of your data entry, etc. It's all available on source. For example, I want to apply a loan midnight, 12 o'clock, I want to apply for a loan. Is it possible? Earlier it was not possible. Now it is possible. 12 o'clock midnight, I want to avail a loan. What should I do? Go to the app, do a e-KYC, data is automatically fetched from the Aadhaar repository, update your banking credentials. When I say banking credentials, how do you update? It is not that you are taking an image of your bank statement and uploading. Not required. You just type your cust ID, it will go to the bank, it will scrape the information. There is an account aggregator in between and he will pull up the data. So that is digitally available. Bank statement is digitally available. You are a self-employed guy, you want to submit your GST, is it possible to digitally submit this? The answer is yes. Go submit your credentials, GST is automatically populated. So there is no paper in the process. Video KYC is done. You just blink your eye, it takes your photograph, it knows that you are not a robo and you are a human being. We have reached that stage where you need to prove that you are a human being. You are proving that you are a robo. Got the difference, right? You are proving that you are a human being to a robot. And you are putting your thumb impression. Earlier, those who couldn't sign, they used to use their thumb in the application form. Now it is back to thumb. You are putting your biometric. So it's a vicious circle, or it's a complete circle of life, I can say. It's not a vicious one, it's a complete circle of life. Okay? So that's the way it is. And then the entire fetched information, digitally fetched information goes to the underwriter. There is no leg in between. Earlier you need to sign the physical application, attach the KYC, say that yes, self-attested KYC. It all goes to the CPA or the processing agency. They put up the CAM and then send it to the underwriter. There is nothing of that sort is required now. It is directly coming from the source to the underwriter. So one leg is completely cut. That's what I'm saying. So therefore, cost efficiency. So this is what banks are doing now. Fast, scalable and process-oriented thing they are doing rather than monotonous repetition of work. One more layer to this is bots. If there is a repetitive work, they are replacing that with bots. There is no human interface. They know that this is the work that has to be done, it's completely predictable, and therefore they put bots in place of humans. It's a huge cost saving. So you can look at the P&L of banks, you see their cost to income ratio, then you will understand. It's coming down, most of the banks. Why? Because they have gone in for automation. This is what I do. High productivity. Within the credit teams also, there will be one credit team who will handle high risk applications. Extremely risky. Where CIBIL score is 600. They will handle that kind of profiles. Some other team will be looking at cases with 750 plus CIBIL score. Just giving a very crude example. That guy who is handling 600, CIBIL score 600 will run at a lower productivity. When I say lower productivity, expectation from him is that you just do 50 files a month. Whereas the other guy who is running at 750 CIBIL score, the expectation will be that you do 100 files per month. I'm just giving an example. So the cost of manpower also is different for different shops. There are different swim lanes which are created for different set of customers. And there is a capability to identify which customer has to go into which swim lane. That is the advantage of having technology. I apply for a loan, it classifies me, this is a medium risk guy, so you go to this shop. Like an assembly unit in manufacturing setup. It's a clear swim lane which is created. So now, what do we have? Sorry. Where do we stand now? This is the India story. You saw the GDP and all those things, it's all available on your public domain. Everybody knows about it. I don't have to repeat it here. But do we have the best rating from the international rating agencies when we have a 6.8% vis-a-vis the other countries? The answer is no. We are lower than Peru, we are lower than Kazakhstan, we are lower than Bolivia, all those countries. Because it's all driven by US rating agencies. And there is a response to this written by our finance ministry. It is also available in public domain. You can read that report. On what basis international rating agencies are rating India, which is not acceptable to the government of India, they have written a response to the rating agencies. Just read that report. I would strongly recommend. On 142.8 crores population, less than 25 is 50%. Which means the appetite for credit is going to be humongous. They will start their own enterprises, they will come for credit. So the ample opportunity available for this provision. And also the chartered accountants who are serving the banking industry in various capacities. It's a huge opportunity. And number of banks in India is around approximately 90 banks are there, commercial banks, 91 banks are there. Still there is a 10% of population which is underbanked, non-banked, which is approximately what, 14-15 crores of population is still yet to taste their first credit. Huge opportunity. You know the population of New Zealand, which is 50 lakhs. And we have 15 crore customers yet to take any financial product. So opportunity is very good. And last point, I would like to talk about JAM here. The last point. JAM is what? Jandan, Aadhaar and Mobile. JAM Trinity. Jandan, Aadhaar and Mobile. 98% of the customers of India, when I say population of India, is connected to Aadhaar. They have an identity. Mobile number is your identity now. Do you agree? Google knows more things about you than your spouse. Right? Which all YouTube videos you see, it is known to Google than your spouse. Accordingly, the ML, there is a session on ML today, right? YouTube will trigger you saying that, sir, you watched this particular video, would you be interested in looking at this also? Same is going to happen in financial services industry. You have availed this product, you have shopped it from Amazon, would you like to shop it again? Or a similar product. That is ML. That's going to happen. And already happened. So this JAM Trinity has actually revolutionized the Indian banking industry. Fantastic change. So if a bank is not doing this, if they are not transforming their technology, if they are not transforming their digital space, if they are not automating monotonous jobs, and if they are not reinventing their systems, innovating their systems, etc., they will become redundant. It will be another Nokia story. You can say that I am the best bank in the country, but if you are not doing this on an ongoing basis, you will become redundant. That's what is the way ahead. This is again on the enablers which government has done. Government of India has done all these things which should be used by the bankers. You have an account aggregator today. They have all your information. They will have your mutual fund information, life insurance information, banking information. There is a digital locker available, right? You don't show your physical license anymore. Just open your digital locker and show. So everything is available here on the mobile phone. So account aggregator is there. There is an India stack which has the entire digital footprint of the customer. Go and tie up your API, that is the application processing interface, should have a connection to the digital footprints or the database which is available, and the entire journey can be digital. That's the kind of seamless transition and frictionless experience which customers are going to get. Already getting. You might have heard about 10 seconds loan, right? There is a loan you can avail in 10 seconds, flat. You just give your custody, you authenticate yourself, there will be dual authentication, there is an e-sign available, and disbursement is done. You don't have to interact with any credit manager, any bank official. 10 seconds you get the disbursement flat. How is it possible? Because there is a grading of customers. There is an analytics team which does all the data mining at the back end. And they have all the repository of information. There are 1 lakh customers, they grade them into different buckets, as I told you. This 10,000 is eligible for a 10 seconds loan. That kind of grading is done, and therefore that 10,000 will be able to get their loans in 10 seconds. That's the kind of differentiation. GST is available. CERSA is available, where you get your securities, whatever mortgage securities, whether the mortgage really exists or not, you can check it online. There is a CRILC which says for how high value transactions, how high value credits, how do you fare? That you have taken high value credits more than say 5 crores, etc. What is your repayment behavior? That information is available. GST is available online. Right? If you are a farmer, if you have a plot of land and you are cultivating say paddy or whatever, what you have cultivated in this season, what you have cultivated in the previous season, that is available through satellite images. There are companies who are able to give you this information. What is the yield per acre? That is available. So what more information can we gather through digital modes? Everything is available for the underwriter to, I'm only talking from an underwriting context. For an underwriter, information is available at his fingertips. It's only a question of using that information and basically taking the right decision, as against not having information in the past. For information you need to scout and go through various channels. So this is what I do. There is a company which gives this information, farm level information. What is the acreage that you have? Whether that acreage is owned by you or somebody else. Ownership is also communicated. Suppose you are applying, X is applying for a loan, and the credit manager sees this report, it says Y is the owner of the property. Then obviously he can reject the transaction. What? And X is saying I am cultivating paddy and therefore my yield is so and so. But this report says no, he has cultivated cotton. There is a dichotomy difference which can be further probed by the credit underwriter. That's possible. So this is a point which I was referring to earlier. There are credit swim lines created for different set of customers. Each customer, based on the risk appetite, will go into different credit swim lanes, and accordingly the pricing will be different. The IRRs will be different for each credit swim lane. I think we have already covered this. I don't want to spend time. It is almost 10:50 now. I want to eat into Mr. Raja's time share. Everything has undergone change right now. Past, present, and tomorrow it's evolving. What is the impact on the 5 C's of credit? Character, reference checks. I am saying 2 blocks. Earlier block, first block is the earlier what we used to do. as an underwriter. Second block says what is happening right now as we speak. Earlier, for example, character, we used to do reference checks in the market. Somebody applying from Salem, we used to call Arun and find out, sir, Arun sir, pay பண்ணுவாரா sir, இல்லையா sir அப்படின்ற. இப்போ வந்து that is not required. It is available at your fingertips. CIBIL score is available, right? Everything is available. So that's why I mentioned about Jam, Bureau, social media. It is again one important item. It's a non-traditional way, but it's again an important indicator. What are you uploading in your Facebook? What are you uploading in your Instagram, your LinkedIn, etc. LinkedIn will give you the entire, what do you call, the horoscope. If you have updated your LinkedIn, how many years you have worked in a company, all those things are available. What more information can a local reference check give you, right? Similarly, going to capacity, we have done basically the capacity of the customer to repay the loans. We used to again verify on the documents provided. Nothing more can be deciphered. But now the capacity can be more certainly understood. The probability of confirming that the customer is having capacity to repay is evidence through your bureau reports. Right? Everything. Capital. Capital is something which, it's an evolving item. Obviously, we refer to balance sheets, etc. Now there is a technology, OCR technology, to even read your balance sheet and digitize it. Right? There is a API to your net worth. Account aggregator can give you what is there in your bank account by way of FD and all those information. So there is a corroboration of your net worth which is stated in your balance sheet. Everything is evolved. Conditions. Conditions is the last item. So conditions meaning what is the condition of that particular industry in India? What is the global condition of that industry? All industry outlooks are available to the underwriter. And what is the terms and conditions you want to put in a CAM, that also you can easily decipher based on the available information. So everything is pretty much available through digital mode. But having said that, people will still continue to be one of the most critical assets. They need to equip themselves with all the latest knowledge and information available. Unless we do it, we'll be becoming redundant. Equip yourself, and everybody has to equip themselves to be relevant in the market. While all these AI and artificial intelligence, etc. are there is nothing to replace your natural intelligence, right? So these are all the few items which will definitely be there moving forward also. You can look at the supervision based intervention, where basically you are doing an exception management. You are not getting into the mundane daily activities. You are only doing exception management, portfolio quality management, right? And equipping, more time on training. Such training sessions are extremely important. And I thank Arun and Mr. Panna for organizing this. It's very relevant today. That's what is going to be the future. Critical feedback, part of intelligent design, all these things will become very, very, very important and relevant. And I think this is the way forward. We will try to coexist with the robots. Thank you so much, Mr. Arun, for this opportunity. Thank you all.
Yeah, thank you very much, BBS Moni sir. I thought it would be a simple inaugural address, but your inaugural address itself is like a technical session for about an hour. Thank you very much once again. You have briefly take us through the transformation of banking sector in line with the technology. Thank you very much once again. We can now break for tea and reassemble within 10 minutes for the next session. Let us break for tea. Welcome back to the first technical session. The first technical session is all about transforming banking through machine learning powered fraud and risk mitigation. We have with us CA Anand Prakash Jangid sir. May I now request Arun sir to escort Anand sir to the dais, please. Anand Prakash Jangid, a passionate evangelist for tech-based disruption in audit and finance domains. Anand is professionally a chartered accountant and a certified information system auditor. He is the managing partner of AJA, an organization which focuses in the area of forensic audit, information system audit, fraud analytics and blockchain for internal audit function. Anand sir was part of the risk management team at Goldman Sachs, covering multiple audits across much geography for different functions in the organization. His areas of specializations were forex audit, DP audits, anti-money laundering, Basel II, BCP and operational risk. Prior to Goldman Sachs, he was with the ES Consulting Group at Infosys Technologies Limited, Bengaluru, where he was involved in the development of regulatory compliance framework for various compliances like Sarbanes-Oxley Act, etc., and was part of the team developing solutions for Basel II Accord implementation. His responsibilities included working in sync with the project of Infosys Consulting Dallas. He has been involved in enterprise risk management implementation and IT audit for many international projects including United States of America, United Kingdom, Japan, China, etc. He is a visiting faculty for IIM Bengaluru, teaching information system audit and fraud analytics. He is a speaker at North America CACS and Euro-CACS of ISACA. He is a regular visiting faculty at ISACA, ICA and Wellington Institute of Management. With this brief, I have great pleasure in welcoming Anand Prakash Jangid sir to take us through the first technical session. May I now request IIM Migration Arun to present him with the shawl and memento, please. Over to Anand sir for taking us through transforming banking through machine learning, powered fraud and risk mitigation. Over to Anand sir.
You have slides yet, sir? I have the slides. One second. Okay. So very good afternoon, or good morning actually, sorry. I was actually listening to Moni sir. It was a very interesting session, and this actually, I hope you can see the slide on the thing. Great. Okay. So my session, I have actually around 1.5 hours. So I am between you and your lunch. So, and I know it's going to be a long session. So I will actually try to make it more interactive. So that's the reason I'm actually down. Because I have to be, it's not like death by PowerPoint. I want to show you some of the stuff and all the things. Because this may be a little technical topic for many people, and let's try to see it from a perspective of a professional, how all these things work. So if you see, my topic is transforming banking, and Moni sir did my job easy because he already talked about a lot of things which are changing. And I see a lot of senior members out here and a lot of young guys. But I think the senior members would agree that we all started doing the audit, the first bank branch audit. It used to be all this ledger. And I remember I was actually an article clerk when first time I went for a bank branch audit. So I hope all of you remember your first bank branch audit. It is like first love, no one forgets it. Okay? Why is that so? Because it's actually new area. I was a foundation student and I was actually thinking of quitting CA because it was very boring in offices. No, seriously, it was like, you know, you go to office, you're from college and suddenly your boss is saying that you don't know how to step in. And they used to teach us how to stepper also and all that kind of thing. So it was very boring. But then what happened, like just 1 month, I was thinking to quit. Bank branch audit happened. And I still remember my first bank branch audit was Corporation Bank Shivni branch in Shimoga. I'm from Karnataka. So I still remember the place. And we went there. Oh my God, it was like amazing. Like, you know, the bank manager was standing outside with the coconut water to welcome us inside. And the treatment was so good, like it was better than my marriage also. No one treated me so well in my marriage also. And I thought, oh my God, this is interesting and I have to learn everything about bank. And it was interesting because first day my boss said you do compounding interest calculation. And we took that ledger and we do this thing. And banking is actually interesting area because every day you learn new things. I was never aware of this term CASA. See, if in Kannada, CASA means money. So the only CASA we knew was money. And then we see CASA accounts. So the whole terminology is everything, you know, capital adequacy and all that kind of things. Very fascinating. Now, there is a change happening right now. And as you know, I just thought before I say what is changing, let's try to understand the genesis. See, if you try to see banking is related to something called as, I don't know if you've heard about the history of banking, they are being taught everywhere. It's related to the Industrial Revolution. Before Industrial Revolution, in India we have this concept of hundi and other things which are there, but it was a different concept. But if you see, the modern banking, what we see, is totally related to what we call it as the Industrial Revolution. Now, if we have to understand what's changing and how it is going to go in the future, a little bit of history is important. Okay? So, let's try to understand the concept, what are the things which are changing around us. And I saw this one very interesting quote, John F. Kennedy. He made a very interesting quote. He said, you know, change is the law of life. But people who look at only the past and the present are going to miss the future. And that's very important to understand because the way we see, you know, our world around us is changing. What we know as banking today may not be the banking in the future. It will be changed like anything. You know, NPCI, when first they came out with all this concept of UPI, people, you know, I myself couldn't believe your phone number is your bank account. But today, the kind of thing, I hope you have seen the latest meme of a person begging with his UPI QR code. Have you seen that meme which is going around? So people have gone to that level that even begging is high tech now. Okay? So what is the thing? How we can actually pursue the future? There's a lot of things which is changing in the banking industries, and as professionals who are auditing them or doing risk management or being part of that, for all of us it's important to understand what has changed. This picture, anyone remembers this picture or knows what it is? It's a very interesting picture. I have to search the internet for around half an hour to get this picture. Anyone knows? No? I have given a hint there also. I said the leader of Luddites. It's a picture of one kind of protest group which was there in UK. In which year? They were in 1811 to 1860. These people were called Luddites. Okay? If you Google right now the term Luddites, or you see a dictionary meaning of the term Luddites, it basically means people who have problem or tough way of dealing with computerization, automation, digitization and all of that. That is the new definition of this. But if you see the Luddites, the concept, it came in 1811. This was a protest group who were at the first industrial revolution time. These people were the guys who used to actually go and destroy factories. You can see the picture in the back side, they are burning down the factories. So these were all steam loom factories. You know, first we used to have manual looms and they went to steam looms. And these people said, oh, what will happen to the skilled laborers? So they actually went and destroyed the factories. Huge amount. You can actually go and check out the history. More than 600 factories were burned during this 5-year period. But every factory owner, within 30 days, used to set up a new factory. Because it was always cheaper to get it done using steam than machine. Or than humans actually, sorry. And that is the kind of thing we see, a kind of concept of replacement of humans to a large extent on the mundane task and all the thing by machine. And I don't know how many of you have read this two artifacts. It's one of my favorite artifacts actually, and I have been quoting this at many of my discussion with fellow professionals. I was actually at College of Supervisors, RBI, and so we were talking about all the things. The point is, what is the king change? There are two very interesting artifacts I would highly recommend you to read. The first one is Future of Professions. This is by Richard Susskind, and Richard Susskind is a guy whom you can't ignore. This guy is the person who predicted in 1996 that email is going to be de facto business communication mode in the future. So 1996, this guy was able to say that email is going to be the de facto business communication mode. And that happened in 1996. And later with his brother, he wrote one more book. 2017, I read this book. And I'm telling you, I read this book in 2017. And around 12 months back, the moment ChatGPT came, I was actually thinking that this guy had predicted that in his book. That human, way of LLMs and large language models and all things, which is trying to appear like a human expert. Like if you can go to ChatGPT and ask some questions, it is very interestingly the way it gives the answers. Right? We'll talk about that, something which I did also. But the point is, this gentleman in 2017 wrote this book, and he was talking about that human experts will be replaced in future. And he talked about three kind of human experts: doctors, lawyers, and accountants. And he said it very interestingly. You should read the book. And by the way, like any one of you want to write CA examination again? No, right? No. I know. No one wants to write CA examination again. Like I am a foundation student, and I was that time 2000. I cleared my foundation first attempt. I thought CA is chiller, and then I flunked 6 times in my inter. And I said no, CA is not easy. I was lucky I cleared my final first attempt, but 6 times when you are flunking in inter, what happened? Like I used to go to temple only on my birthday earlier. There is a Ganesha temple in Rathinagiri. And by third attempt, I have climbed Tirupati so many times, walked and climbed, and saved my head so many times. My hairs have not come back actually. So you can understand, no one wants to write this examination again. Okay? And it's a tough course. You all agree, right? Yes or no? Yes. How many of you first generation chartered accountant here? First generation? Like no one in your family has seen. Okay. Okay. First generation chartered accountant are the best. You know why? I was a first generation chartered, and we don't have any guidance. So we become CA by trial and error. Like I will tell you, by second attempt when I failed, first 2 attempts I thought institute is doing some mistake. Because never in your life you have flunked, right? None of us flunked before that, right? First time you flunked, I said institute is doing some mistake. But third attempt I became serious. No, something is wrong. And one of my friend was there, very interesting. He was sitting, he said, Anand, do you know why you are failing? I said, no. He said, I was sitting behind you in the examination hall, St. Joseph College. St. Joseph School is there in Bangalore. I said, no. He said, you were sitting under the beam. And as per Vastu, if you sit under a beam, the whole building pressure is on your head and you will not pass the exam. And next examination I was searching for the beam. There was no beam, but then also I failed. That is the difference. So we have come along. And this is exactly this gentleman says, Richard Susskind. He said, see, to become a doctor, to become a lawyer, to become a human specialist like us, you have, and by the way, I am not telling this, I don't want a professional misconduct case against me. It is being told by this author. He said, these 3 professions are like mafias. So you want to become a bar council member, only then you can practice. You become a medical council, you can practice. You can't do that. So his point was that in the time to come, in 2017 he wrote this, in the time to come, knowledge is going to be important, skills is going to be important, not your degree. And his point is like this, like how many of you have seen this movie John Wick? 1, 2, 3. How many of few people. Okay, John Wick you have seen. In John Wick, like I was, you saw from my thing, I was 4 years I was in Goldman Sachs in Japan. And 4 years in Japan when I was there, my favorite, like I was bachelor that time. So after marriage I came back and I joined Infosys. But I was bachelor, so what do you do? So one of my friend was there. Both of us had our favorite part-time job was like this. We'll go in metro and we'll search for people's fingers. Why? Because there is a kind of mafias in Japan called Yakuzas. And if you want to know who's a Yakuza, there's only two ways you can find out. One, he would have a lot of tattoos on his body. And second, they will cut their finger to show their loyalty to their boss. Okay? Now, in one way, to become a doctor, lawyers or CAs or CPAs, whatever we talk about, you have to show your loyalty to the profession. And we do that. We work very hard towards that. It's not an easy thing. And that is exactly his says. But the point is that, his point is there are new technologies which is coming which will mimic human expert. See the word there, very interesting. It says mimic. It is not a human expert, but you will try to act like a human expert. And you can try it out. Like I'm sure all of you have tried ChatGPT. I have a plus version on ChatGPT and I actually tried one day asking a question. I said, so I got a notice on 142, that income tax notice. And I am a little fake chartered accountant now because I practice not in income tax or GST, I practice more on fraud analytics and all this area. So I said, can you give me any case law on, section 142 of income tax? And it said, yes, there is a very famous case law of Kolkata High Court, some Chatterjee versus, blah, 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 income tax department. And in this thing happened. But when I tried to search it on internet, it was not available. It was not available. And then I said, oh, this is interesting. So I had a friend who was in income tax and I asked him, can you check it in the ITR, this case law is there or not? He checked the whole database. It's not there. So, but good thing about ChatGPT is don't know how to lie. So I actually said, I checked all the things, but this case law doesn't exist. So if you have a plus membership, you can see the complete track of all the chat which you are having with that. Whenever you have left the chat, you can start again from there only. So I said, why you are lying? He said, no, I just made it up. Now, do you remember when we used to learn CA, we used to have, one very famous CA from Bangalore called Kincha, Padamchand Kincha, he's an income tax expert. And he used to come and he will throw ITR this number, that number and will jot down in CA file. Some people remember ITR by back of their mind. But we used to see other faculties also will come and they throw some numbers. ITR this. And it doesn't exist, okay? So not everyone can be Padamchand Kincha, okay? So the point which I'm trying to bring out here is, it is mimical a human expert. Did you see that it just made up something and gave it to me? The point is that this is the kind of thing which we need to understand. It's changing around us and that is exactly the future of profession is coming up. Second thing, which is a very interesting thing, and I told you I'm a first generation chartered accountant. And do you know what is the secret desire of all first generation chartered accountants? Anyone knows? No. So all first generation chartered accountants' secret desire is their kids should also do CAs. Because why should only you suffer? They should, like, I hope some of you have teenager kids and all things. So my daughter is in class, 12th, and I said, okay, Baba, you have to do CAs. Because they are flying very high, all these things that I know this, I know that, everything. And I have to convince her. So I convinced her and she registered for CAs. But then I felt guilty about myself that whether it is a good profession or not. I have been, passed. So I actually went to this Future of Job report from World Economic Forum. You should actually go and read this one. Very interesting artifacts. 163 pages and read the whole of that. You will be shocked to know that they talk about chartered accountants and accountants worldwide. There is one, I have just taken an extract from there. Can you see this one? Top 20 job roles in increasing and decreasing demand across industries. And for your benefit, can you see these are the things increasing demand? Data analytics, AI, machine learning, big data, process automation, digital transformation, information security and all. Can you see what is decreasing demand? Number 4, accounts and audits. So I saw this report, I got a heart attack, so I go. Now my daughter is going to be in trouble and she will curse me later when she becomes So I read the whole report. I have not read the only the thing. If you read the whole report, you understand one very interesting thing. Very interesting thing. Anyone has seen this movie called Catch Me If You Can? It's about frauds. See that movie? Leonardo DiCaprio? Yes. Do you know this earlier planes? If you see a plane, earlier Pan Am and all things, 747. Do you know what used to be the standard configuration of pilots? Like how many pilots in a plane? It used to be 5 pilots. 3 pilots, 1 navigator, 1 engineer. That used to be the standard configuration of every plane till 1987. Then they went for a lot of these automations and everything and used the dashboard and all the concept. Today, how many people are there in a cockpit? 2. In fact, 1 can do it, second one is just a backup. And the one guy also don't drive because there is an auto pilot mode also. Okay? Which means, what was required to have 5 people, you require how many now? 1 or 2 people. Exactly the same thing they are talking. They are not saying that they will go away. No. They are saying in the future, professionals with understanding of technology. There is a new term Deloitte has given to this kind of professional. They call them purple people. Purple people. I don't know why they brought out this purple people, but this name was given by Deloitte. You can go and check out purple people Deloitte. It will give you the full thing. These people who are actually professionals or bankers or anything, but they are enabled with tech. These are like crossbreed, you can think of. A professional who's not just in one area, but a crossbreed, who understands technology also. He knows how to use it and take that forward. And that is the difference. If I have to give an example here, very interesting of purple people. How many of you know Dr. Devi Shetty? I've heard about him, Narayan, big cardiologist. He's from Bangalore. We are a member of NASHCOM. So I got an invite around 1.5 years back of a AI conference by NASHCOM, where keynote address is given by Dr. Devi Shetty. And I was really actually surprised. I thought some technologists will come and talk, and they have got Dr. Devi Shetty to come and talk about technology. He's a cardiologist. He's taking about technology. And I was so, intrigued to know what he's going to talk. I actually went for that session first. It was like keynote address, so first session. I went to him first and I was sitting in the front row, understand. And I am telling you, that was the best investment of my time I have done. He actually spoke for around 45 minutes, but he gave one very interesting example which I'm sharing, and it's not my example, it's Mr. Devi Shetty. He said, see, people say technology is going to disrupt and all things, but people don't actually know the term called, he said, use cases. How to use the technology. Use cases are important, not the technology. And he gave an example to all the people who are present, which was very fascinating. He said, let's say for example, just internet is there on this one. So he said he's a cardiologist and his daily job, he had a big issue. What is the issue he faced? Let me show you. Just 1 second. So he said he faced a problem that whatever he has to, in a day he will do 5 or 6 operations. For all the operations what he's doing, he has to do a transcribe. So earlier what he used to do is he will actually say it in a recorder and his assistant or her will actually do it. Now are you seeing whatever I'm saying is actually coming on the screen there? This concept is called NLP, Natural Language Processing. It's not a, it looks like a great thing right now, but it is there in part of your Microsoft and Word and today everything. He said that I found that my transcriptions were all coming wrong. I have to again review it. So it is a 2 times I have to review it. So what he said, see, have you seen in your phone, when you bring the keyboard, have you seen this one small symbol of, speak? Yeah, that is like you can actually have the microphone on. He started using that feature, and anyway he has to record it up. he will record it in this one. So the transcriptions person can just do a final check and do it. So it is a one time. Earlier it was 2 times effort, now it is 1 time. But then he found one issue in this. There are some tongue twister words, in medical terms, which were not coming correctly because pronunciations and all things, issue happened. And now this is the most interesting. I said this is a problem. Google will take another 5-6 years to solve it. What is the immediate solution? What that person did? He asked one of his junior to add this 23-30 terms which are there as contacts in his phone. In the phone, if you add them as contacts, the name, then machine will know that these are the thing. So the tongue twister word is easy. Now imagine he's a cardiologist. He's running a multi-million-dollar operations of Narayana. He does so much of the thing, but he knows that I can use this technology to make my life easier, better, and process. That is the interesting thing which we need to understand. And that is exactly what has happened. If you try to see this in the 4th industrial revolution, see, this is a very interesting thing, and history teaches us a lot of things. The first industrial revolution, if you see the time, started from 1784, but the peak came in 1811. It was the peak which it come. Second industrial revolution, I'm sure you have seen this movie by Charlie Chaplin, The Modern Times. So he goes into the machine, comes out of the machine and all thing. And this movie came in 1930, but second industrial revolution, which was powered by electrical energy and mass production, it was actually there, or it started from 1870. Third industrial revolution, we all have experience. I hope you remember the time when you have to go to railway station to book your tickets to where we are right now on your mobile phone, you will do it. Computerizations and automations and everything which happened. But what is most interesting is the 4th industrial revolution, and it's actually, as per World Economic Forum, it just started in 2019, which means we are just gearing up. And what is this powered with? This is powered, friends, by some new kind of concepts. We call that as cyber physical system. So how many of you have an Apple iPhone? Okay. Only 5 rich people. Okay, I'm just joking. But have you asked Siri, who's your father? Anyone has asked this question before? Only I was doing this during lockdown. Okay. So on lockdown, I was actually just sitting and no other work. So one day I started asking Siri, who's your father? And Siri is a very interesting machine, okay? Because she says, first time she says, Steve Jobs. If you repeat the question 5-6 times, Siri says, engineers at Apple built me up. You do 10 to 15 times, it changes the answer to, I don't have a family tree. But the interesting thing starts if you do more than 45 times. So I was literally, no other work at all. So I was just asking the same question again and again. After 45th time, Siri becomes angry. Okay? And that is funny because Siri is a machine. A machine is supposed to do the same thing again and again and again. Here it's like saying, oh, don't you have any other work to do? Can you imagine that? But you have to go 45 times. You have to have patience. Or I don't know if you have tried Alexa at home. But does Alexa has now Tamil support also is come? Yes? Try it. I'll tell you, it will be more fun. Like at my house, I actually put Alexa and I put Hindi support because my mother is 73-year-old. And she will say, like, want in the morning, Vishnu Sahasranama you have to put and all the things. So what happened, my mother is 73. So as an old person, she will little bit of blabber. So initially, when you say, Alexa do this, it will say, I'm sorry, I didn't understand what you do. It will say in Hindi also the same thing. So once my mother was saying, Alexa, Vishnu Sahasranam bhajao. And Alexa said, couldn't understand. She said 2-3 times my mother said it and it didn't do it. 4th time my mother said, Alexa, in Hindi she said, Alexa tu mar ja. Like go and die. Old people, they are like very frustrated. And what happened next, my mother told me when I came back home, Alexa said, Are shubh shubh bolo. I don't speak with this kind of evil things and all the thing. And this is like funny, this is a machine. And you know, next time we ask the same question, it is not giving the same answer. These are called cyber physical system. If you have Alexa or a Siri at home, this as a personal assistant is separate for this. Or a more interesting example I can give you is a Tesla car. Is it a car or is it a computer? If you actually value it as a car, it is not a great car. But why do they get a premium? Why people are doing it? Because it has this autopilot features. It has a lot of the self-drive features and all things. So if you take a Tesla car, it's a cyber physical system. It is not just a machine. It's actually a cyber physical system, and that is the new thing which is coming up in Industry 4.0. You have Internet of Things. More and more machines are connected to big data. Oh my God, this is something which we will be spending some more time. We are actually having an explosion of data. You know, you want data. You have so much of data, you don't know what to do with data many times. And that is exactly what is happening. And the last but not least is smart manufacturing, which I hope all of you know. How many of you have been to a Nexa showroom? Nexa, yeah. How is Nexa showroom different from a Maruti showroom? Both are owned by Maruti, right? But what is the difference between them?
The appearance.
Appearance, they look little classy. They'll give you a glass of water when you go.
That is one. And the technology.
Technology-wise, the main difference, what is it?
Service.
Service, no, not that one. See, I can get a Baleno car from Nexa also. I can get a Baleno car from Maruti showroom. But, friends, you have to know one thing. I can never go to a Nexa showroom and get a Maruti car immediately. It is made to order. Humans like customized things. Like, have you seen, you go to any of this, archaeological places, people will put their names, this love this and that kind of arrow marks and all the things. We humans, like, you can imagine, like, Apple came out with a feature saying you can engrave your name on your iPhone. The sales went from here to like here. People like, we humans like customizing. I'll tell you, my first job was Aditya Birla Group, and I was posted at Madura Garments, which is nowadays called Aditya Birla Fashion Retail. I still remember, at that time, Louis Philippe, which is a brand of Aditya Birla, they came out with a very interesting thing. In Electronic City, Chandapura, we opened our state-of-art suit factory. It will only make suits. And we said you can go to any of the Louis Philippe showroom or Planet Fashion showroom, which are owned by Aditya Birla Group, and order a made-to-order jacket for you or a suit. Because made-to-order, like, I don't know, have you tried tailor-made and all the things? There are some of the things where you can go and get a suit. They are pretty expensive. Huh? Like, tailor-made will take 80,000 rupees for a suit. So, that time, I'm talking about 2002, first time we had SAP, and we said we will actually take orders and we'll put it up. You won't believe, 9 months we stopped that process. It was very tough. Made to order production is very tough. Because I can make same type of suit how much ever you want. But everyone will have different color, different style, different this. It went like even up with a margin of 55%. We were not wanting to, 55% margin, we didn't want to do that. Can you imagine that? The reason is it's not easy. Production processes are not easy. But today we are talking about making smart manufacturing, which is that it will not be an assembly line, it will be made to order. Every car is made to order, not assembly line. And all these things is already started. The disruption, if you want to see, I'll just give you one example because I come from the banking side. I remember when I was at Goldman Sachs, whenever we used to go to US, we used to try to search for a Desi person who can take us to the, the floor of UBS. UBS has the biggest trading floor in the history. In North America, they had the biggest trading floor. That was the picture in 2005. This is the picture in 2016. Now it is closed. Can anyone tell me why did they close it? Why they had such a size of a football field? A football field size trading floor was closed down. On this sir, it is all online. You can see all these people, if I'm not sorry, all are on desktops and everything. They are working online. Everything that time also online. There's only one thing which changed. Any guesses? Automation was there. There is another little different. Automation is simple, sir.
This may be user friendly.
No, user friendly it was that time also. You can see that.
The connections with everything so that they can operate from the home.
Okay. Work from home kind of thing. No, sir, nothing like that. Work from home, sir, people are calling everything back. Have you seen TCS is saying you come to office or you're fired? Work from home is a big fraud. In our office also we tried it, we said no. Work from home, no one work on it. Huh?
Work from home.
I also, I hate that work from home.
COVID
Come back. Sir, I'll tell you what is this algorithmic trading. You remember, I'll just give you an example. I'm sure a lot of you are in stock market. If I go today, let's say Goldman Sachs goes in the market and says, I want to buy 5 lakh shares of TCS. The moment I give an order of 5 lakhs, what will happen in the market? 5 lakhs is a big block. The prices is going to zoom. So what these companies used to do that time, they used to break it up. Some 5,000 or 10,000 block, they will give the orders. They will not give one order of 5 lakhs. Why? Because the moment you do this, market will zoom up. But after algorithmic trading, it is possible that I can actually break it down. I can actually have, market can be 5,000 automation. It can say, but it's an algorithmic trading. It will buy also, it will do some selling also at a low price. So the market price should go down. It does all that kind of thing. So that one thing changed the whole thing. So this disruption started. And there is one very interesting statement by Klaus Schwab, who is the founder chairman of World Economic Forum. He says, the technological revolution we are seeing is something which we have not seen, we're not, like next generation would have not seen it. Something like COVID, only our generation would have seen it, right? And that is something, it is the complexity and transformation unlike what humankind has ever seen. And if you want to understand this, I'll just give you one example for this. Telephone took 75 years to reach 100 million users. But I don't know how many of you played the Pokemon Go game. It got 100 million in less than 1 month. And ChatGPT took how much? 23 days to reach 100 million. Are you seeing the speed at which things are being getting adopted? People are, if you don't adapt it, you will be actually left behind. And that is something which is, you know, how the desk is changing today. And everywhere, what used to be there on your desk is now coming into your laptop or your tablets and other things. And this is what we call anything which is going to radically change it up there. What we are going to discuss on machine learning is actually also a radical technology which is going to change it up there. And how does it happen? There is a very interesting statement which was a survey done by MIT Sloan, and they said that everyone knows that yes, technology is coming and going to change the way, but not many people are preparing for it. You can see this one, 90% of the CEO believes that digital is going to transform everything. But how many are getting ready for that? Less than 50%. And that is the challenge which we are facing. And banking also is changing. Whether you are a person who's managing the risk, whether you are a person who's doing audit, or whether you are actually in-house, audit team or risk management team, for all of us we have to understand it is no more a kind of a silo. It is actually everything is related. The core banking system, I still remember long ago, we used to have branch level automation. Then we went to region levels. Then we have like all of the things. Today we have talked about omni-channels and all that kind of thing. You are actually having multi-functional collaboration. You are having data-driven business processes. Sir also mentioned about that. Technology-enabled business transformation. Today, how many of you are comfortable to go for a bank which is not having a core banking system? Or no ATM? It's very tough. But when you go for a new areas, new risk also comes into picture. New challenges also comes into picture. And that is where we have to do it. But one of the things which I really like about the banking, which is they are doing is, have you seen this last point? Banking 4.0 is actually doing a lot of a culture of experimentation. See, bankers are supposed to be conservative on this. Even underwriting, we used to say, oh, you have to be conservative. But we are seeing a change because they have understood if we don't do a culture of experimentation, it's not going to work. Right now we work with, I don't know how many of you have seen Canara Bank actually did a hackathon. We were part of that, and IOB also did a hackathon. Both the hackathon we were part of that, and some of our use cases got selected. When we were actually doing it, we were very shocked. They gave us state-of-art machines, they gave us state-of-art data access, and we were doing some of the things and doing it. You would have never heard about a PSU bank or PSB ever doing this kind of hackathon concept 10 years back. That is a great change what we are seeing in the bank, which was never there. And that is leading to one of the very new accelerator which has come out there, which we call the data enabled accelerator. All of you know this, how much terabyte, up to terabyte we know? How many of you know 1024 terabyte is 1 petabyte? 1024 petabyte is 1 exabyte. 1024 exabyte is 1 zettabyte. 1024 petabyte is 1 yottabyte. 1024 yottabytes is 1 brontabyte. And 1024 brontabytes is 1 geobyte. Why I am telling you this one is, as per Google, they have a conference which happens called Google I/O conference. You can go on YouTube and actually search this Google I/O conference. You can attend the seminar sessions free of cost. I would highly recommend you to listen to one of the talk by Eric Schmidt, who was the ex-chairman of Google. On Google I/O conference, Eric Schmidt's speech, listen to that. He said, in his recent thing, he said, the amount of data humans are producing every 2 days today is equivalent to the amount of data which we generated from the dawn of the civilization. When was the dawn of the civilization? When we started painting on the caves. Till 2010. Whatever data we generated, we are generating every 2 days. You know how much geobyte he is talking about? 56,000 geobyte of new data is generated every day. That's the kind of new data getting generated every day. It's a huge amount of data. You remember we used to have a time when we used to have this camera. We used to keep a track, 36 reels are there. We used to see how much is done, when to take it to the color labs to get it done. Today, how much pictures or selfie you will take on a daily basis. Each picture is around 2 MB, 3 MB, 5. Do we bother about that? Have you seen in our family group how much good morning messages come, boring messages? That is also data. Everything is data which is coming. And we are generating a huge amount of data. But you have to understand one thing. This data which is coming is not just internal data which used to happen again. It is now a very different kind of data. When I say very different kind of data, friends, I have a question. How many of you have gone to data.gov.in? Anyone has gone to this site? No? Sir has gone. What did you find, sir, interesting there? Something interesting? What was that, sir? Tell us, share it, sir. Very interesting. Some new area, some new data, like you can get vahan.org. Data are actually being sold now. You can get this data. You can get IRDA data on data.gov.in. You have to thank the government right now. I was shocked, like how many of you have been told when you were registered for CA that along with CA you do one more course and you'll become very rich? No one told you this, only I was told. So when I was doing my CA, one of my friends came and said, CA is good, but along with CA you do one more course, you'll become very rich. And I came to CA to become rich only. So I said, what is the course? He said, actuarial. Have you heard of this actuarial? But then I went to their branch in Bangalore. The branch was so bad, I said no. If they don't have money for their branch only, how they can make money? So I didn't do this course. It was a good decision on my side. Okay? What do actually do? Anyone? They are statisticians kind of. They will give you a kind of, let's say if I'm an insurance company and I have sold like 50,000 insurance or health insurance this time, they will say how much provision I should make in my books of account. You have heard about this case? Yes? IRDA. I'm telling you, they are killing the whole, actuarial community. They actually posted sanitized data, which means you can't get the name and other things of that person, of all the health claim in the country for last 10 years. Which means, earlier we used to actually go to actuary, he will say, if you have sold insurance in Tamil Nadu, Karnataka, Kerala, this kind of, things will come, and based on that you have to do this estimate. Let's say for example, you are from Punjab. What kind of health claims will come more? Any guesses? Lungs? Why? Punjab? Burning of it. No. By the way, I'll tell you something interesting. Bangalore is the asthma capital of India. Highest asthma claim is from Bangalore. It is data is telling, and data never lies. You know what is Punjab issue? I first thought like this is perception. Sorry, any Punjabi, don't take it offense. I thought, any Punjabi? Drinking, right? I thought they drink a lot of alcohol, so never issue would be there. This was my thought process. But when we saw the data, you will be shocked to know it is cancer. Punjab has highest claim for cancer. The reason is the water level has gone down and so much of pesticide is used. Cancer. In fact, you can Google it out. There is a train between Punjab and Bikaner. It is called Cancer Express. Most of the cancer people will be using that train. And if you are a cancer patient, you don't have to pay that fees in Indian Railway. Then I said, okay, this is interesting. Then I said, I had a perception. Gujarat. What kind of claim do you think Gujaratis will be doing? I thought diabetes. Because they put sugar in everything. I thought diabetes is the issue. But it was cardiac issues. They have the highest amount of cardiac issues. And any guesses of Kerala? Anyone from Kerala? No one from Kerala? Yes, sir. So what do you think Kerala? So Moni sir said it is liver. Sir? Liver? Actually it is liver. I thought it would be different. We have office in Trivandrum and I was just checking. I said, you see the data. There is a direct correlation of data. Kerala has the highest per capita consumption of alcohol. Punjabi guys are all show off, okay? They just show off that they drink a lot. Actual drinker of India's are Kerala. Highest per capita consumption of alcohol in India is Kerala. I think Kerala government runs on the tax money of drinkers only. That's the kind of thing which is. Now, are you seeing that data never lies? And that data is all coming for data.gov.in. You are seeing all these sources. Today, businesses are changing. Do you remember there was a time when FMCG company used to say, hey, you know what, I want you to do my store verification. A lot of chartered accountants used to do that. Are you aware of that case? Now, FMCG companies are coming and saying, okay, we will not do all the store verification. We will do only the verification of stores where we have an exception. 90% of the thing is done by Google API. So they will actually say whether this store exists on Google Map or not. If it exists, they are not going to verify that. If it doesn't exist, then there is a question. Good. All these things, and this slide took me some time to make. I still remember I left Infosys in 2015. And when I left Infosys, one of my last projects was implementation of a software called SAS. SAS is for risk management. It's used in bank, insurance company. And we implemented for one of the insurance company in Mumbai. The license cost was 3 crore. And implementation cost which Infosys took was 2 crore. So total expenses, 5 crore. What you're seeing on the screen is all the open source technology which can do the same thing at a fraction of cost. Maybe for 15 lakhs you can actually get the same thing. We call this as democratization of data analytics. The power of data analytics is coming to everyone. The machine learning power is coming to everyone. It was not possible 10 years back. See, I always say this one. I am actually a very miser chartered accountant. But there are two charities I always support every year. One is Akshay Patra, because I have audited them. I know they really feed kids. Second is, how many of you heard about Linux Foundation? Linux Foundation. It's a very interesting site. You should go there. There are more than 20,000 men and women who are working free of cost to make all the softwares. Okay? Free of cost. Can you imagine that? Like, do you want to do a free audit for anyone? No, right? We will not do it. There are 20,000 plus men and women who are working just for the passion of having open source. All this technology, what you are seeing, which can deal with large volume of data, external data, unstructured data, statistical modeling, machine learning, all this thing is free. Open source. And open source is different. Like I'll give you, how many of you don't like your picture in Aadhaar? No one likes, right? Do you know your Aadhaar database, can you see this MongoDB? Aadhaar is on MongoDB, one of the most important national importance project which we are running right now. That is using MongoDB. So can you imagine that how powerful it is? How much data it is able to process? Aadhaar authentication happens on all things. Everything happens on MongoDB, and it's open source. Or how many of you have seen this one here, Cassandra? You know, this is a database. On Netflix, all your recommendation engines are running on Cassandra. And Cassandra is like very, very powerful thing. And you know, all these things you can actually today take in a laptop and install it without paying a single license fee. All these things are changing what we are trying to do. And this is the enablers which is making and machine learning. Machine learning is a part of AI. We are just focusing on machine learning, but it's a part of AI. So when we are talking about this, friends, I am just telling you, if you want to understand ML, you have to understand first AI, then we go to ML. And this is one document I want to show you. This is an MIT research paper, and can you see the date here? I think my date is 66. What we are talking about machine learning is not a new concept. This concept is a very old concept. But we never had two things to do that. First, we never had so much of data, which we require. And second, we didn't have the computing power. When I say computing power, guys, I don't know if you know this or not. On your MacBook or your laptops, you have a chip. MacBook has something called M2 chip. And that chip is 50,000 times more powerful than the chip which is powering the Mars rover. You know, we sent, as a human race, we have sent a kind of a rover on the planet Mars. The laptop you have is 50,000 times more powerful than the chip which is powering it. Can you imagine that? This kind of computing power is great, which was never available. Like I use an i7 machine, and it's a 32 gig RAM. It can actually do processing of easily, you know, 10 to 30 million line items. We have never thought of this kind of things can happen. So this things is here what we call it artificial intelligence, what it is. It is nothing but you think like human, you think rationally, you act like human, and there's something very interesting called Turing test. Turing test is something, if you are dealing with a human and a machine, and you are not able to figure it out whether you are talking to machine or human, it means that machine has passed the Turing test, and it is like equivalent to an artificial intelligence. And there are multiple streams of that. See, I actually showed you something on speech to text and text to speech. And how many of you use Google Lens? Google Lens, yeah? It's actually, we call it machine vision. It's also artificial intelligence. Like, if I don't know Tamil, I want to read a Tamil document, I can just translate in English or Kannada or Hindi, whatever language I want to do, which I understand. So, that kind of thing, expert system, natural language processing. But for our next 20-25 minutes, which we will cover, we'll talk about machine learning, because that is a game changer for us. When we say machine learning, it's like trying to give a machine ability to learn like humans. And you might think, oh, this is some rocket science. It's actually not rocket science. It's as simple that this thing, as told you, the paper is 1966. If I tell you that what we do in machine learning, that concept is since 2008 it is there, would you agree? Let me show you one example for this. So friends, let's say, how many of you have heard about a term called CASE? C-A-S-E, Computer Assisted Software Engineering. Heard about this term? No? Okay. Let me show you. Okay. Let me open a Word file. So this is a Word file, and I will say something I've written. Okay, I'm saving this file, so I save it. Where should I save? Here. I'll save this file instead of a Word file. I'm saving it as a web page. Okay. So this is a test web page. Save. Let me close this file. Go to videos. This was the file. Whatever I've written, has it come here? But it has come in which format? HTML format, which is called as Hypertext Markup Language. It's a programming language. How many lines of code has been written in HTML for this? Can you see it in the thing? 1572 lines. Did I write the code? Who wrote this code? Machine. This is called as CASE. Computer. Any engineers here? No? So, engineers, you know, after ChatGPT, we are writing codes in ChatGPT, right? Sir knows that. So, CASE is there for a very long time. It's not a new technology. This is there since 2006. I don't know how many of you use macros in Excel. Sir, when I record a macro, who writes the code for that? No, you don't write, sir. You record the macro. Visual Basic, in the programming language, the machine will write the code for whatever you have done. Now, if you remember, I have been using from Excel 2007 macros. It's not a new thing. It is there for a very, very long time. But did you understand that codes can be written by machine itself? I know many of you had in your school, did you had computers? Yes? Did they ask you, like, when you are going inside, you have to remove the chappal, take a shower and then go inside? No, shower was not there. But I know we all had some, at school, the new generation would know that. In your school, they used to make your 5 people sit on a bench, each pushing each other, and that computer used to be there. If you remember, we were all said, oh, if you have to do programming, think logically. Step 1, step 2, step 3, step 4. Now that was a great thing in that era. I remember, what you are seeing, HTML. That time when I was doing my CA, I had a friend of mine whose brother was a HTML coder, 1999-2000. And he used to get $30 per hour rate in US. Those days are gone. No more HTML coding is done. So, see, there means I can write the code myself. Case. Just see the term. Instead of going to the logic, I am trying to do a different thing. Machine learning is being used in so many parts we don't even know that, right? If you are seeing a self-driving car, this is actually kind of image which is taken from Tesla car. Can you see on the left hand side? This is how human sees the road. this is how Tesla car sees a road. It's actually learned from period. Like, have you remember the Tesla car when accident happened? Because there was a cycle which was parked in an angle, we couldn't figure it out, it's a cycle or something else, and it actually crashed. It's a machine learning, it's not like some rocket science that it knows everything. No, it is learning by doing it. It's like how kids learn. Like if you ask a kid, don't play with fire, will it listen to you? But the moment he or she burn his finger, then they will learn it out from themselves. Now same thing is here. And if I have to give you a very, I'm actually trying to be non-technical here. I know we are all bankers and chartered accountants here. I want to be very non-technical. I can become technical also, but I want to be very non-technical. Basic, if you want me to ask what is happening here is, in traditional approach, we define the logic, we write the codes, we define the data source, and we get result. Machine learning. Can you see what is the first step I am doing? I give the data set for learning. I give the data. Humans can see things maximum in 3 dimensions. You know, even for 3D watching a movie, you require specs. We can't see basically in many dimensions. Machines don't have that problem. They can see it in n dimensions. They don't have that problem out there. And exactly the same thing which happens. I give the data set for training. Based on the training, it makes its own learning model. It writes the code itself in case, and I have the result. Now, don't you think it's much easier and better way? But machines are dumb or smart? Actually dumb. So you have to little bit of train them in terms of dealing with that. So you can see this. I am not going to unsupervised, supervisor types of that. But what I'm trying to do is I'm trying to get different types of action from the thing and build up a feature extraction that okay, this is the kind of thing from this data I have understood A plus B is equal to C. Can you see that, understand? The machine can understand. Once it is done, it will write the machine learning algorithm and then it can actually keep on doing it again. The more data you give, better the machine learning becomes. I'll show you some examples of machine learning in banking. There are a lot of use cases. Let me just jump onto these models. I will not spend too much of time. But can you see it is something which is of multiple uses. You can try to see this from fraud detection to image classification to customer retention. And I'll show you. And it looks tough, but to be very honest, most of the things which I'm going to show you are done by chartered accountants. Okay? Not engineers. There are engineers also who are part of that, but don't you think as banker and chartered accountant, you understand the problem statement better? What is the requirement? What is the thought process which is going? And once I do these models, I can try to see pattern recognition, I can do predictions, I can do anomaly detection, I can go into fraud prevention. And my favorite area, which I really love, is process mining. Process mining is something which I'm very passionate about in machine learning now. You know why? I'll tell you. People think, okay, I have a question for all of you. All my audit and risk management friends, do you think every organization follows SOP or not follow SOP? Come on, be yes or no. Tell me that. No one follows. Now, I had this problem all my life. Audit committee you go, they want evidence. Oh, you are saying SOP not follow, where is the evidence? Usually, it is a very tough thing to get. But nowadays, if you are using a core banking system, if you are using an SAP, Oracle or anything, every transaction which is happening in your system, there is a timestamp for it, when this transaction happens. If I take the timestamp log data of the machine and run it again, that how did these things happen, I can actually get real thing that this is the deviation which has happened from the SOP. SOP said XYZ, you did X and Z, you didn't do the Y. I hope you got my point. And those are the kind of things it can help you with. And how does this whole model works? It's a very simple one. I'm just quickly jumping it because I want to show you some use cases and I want to have last 5-10 minutes for question and answer also. You connect to the data source, data extraction happen, you make the data a little structured for the machine to understand. It does it feature engineering, model training, you evaluate the model. Now this is the thing, Moni sir rightly said, humans are required for supervision. This will never go. This is the most important thing. We have seen some funny things happening, and I'll show you some real examples also of machine learning. Funny things happening if you allow machine to do it, because they will interpret something else. Okay? So you need to have a supervision of that one. And once you do the proper supervision, you can deploy on the model or complete thing, and you can keep on getting this things out there. These are some of the places where they are using it. Accounts payable, bad debts prediction, spend analytics. Spend analytics would be something like, you think this branch of mine is the best, but when you do a proper 360-degree evaluation, you find that is the worst branch of choice. General ledger review. This is my favorite because GL code in SAP Oracle was always wrong posting is done. Can I read the narrations based on the past data and predict that this should be the way it should be happening? Contract, predicting non-performing asset. Oh, this is my favorite. I'll show you some example also. And travel and entertainment expenses. So, guys, I'll actually try to do one thing. I will not go by regular thing. Just 1 second. I'll show you 2 examples, guys, and I think that should be in one machine learning dashboard. That would be good. And feel free to ask me a question. Let me show you some use cases. How machine learning is being used here. Okay? Don't you think for banks, customers, knowledge of the customer is a very important thing. We know knowledge of the business, knowledge of the customer. So there is 3 things on the terms of how machine learning can be used on customer persona, customer life cycle, and product automation. And it's a real data actually which was being done and all thing. This is actually a customer sphere. So basically you are trying to give a complete picture of each of the thing of that customer, of areas or branch, and take it forward. So you can see here reach, acquisition, conversions, advocacy and all thing of that customer which is happening is being actually done here. Or you can take the persona of the customer. So this is an unsupervised machine learning models. What you are trying to do is, you are trying to, and I'll show you, you take some data from the customer's profile, all the transactions, so master data and customer transaction data, you take 2 of them. There is a kind of a 2 algorithm which is called k-mean and dd-scan, which can be used for this. What you would get is converting different kind of customer into different clusters. This cluster can be anything you want. You want 4 clusters, it will give you 4 clusters. You want 500 clusters, it will make you 500 clusters. Something like Moni sir says, for this kind of thing, we will go into this route. So it actually automatically makes it up. And based on the machine learning, learning will be important. Because tell me one thing, initially, imagine when I actually joined, I was a different kind of customer. But now in ICICI Bank, I am a privileged customer. But it was a salary account which was there. But over a period of like say 7 to 10 years, they are seeing my complete profile and they are seeing that, okay, now this guy is changed into this one. Earlier he was just actually doing X amount of transactions. Now he is doing this Y kind of transactions also and trying to put it out. One example, this is a profiling of the different kind of customers at different branches, different section, different, like Kerala, I want to just see it up, it will come. Or my favorite is this one. Have you heard about a term called silent attrition? No? There is a big problem in banking today. Customers suddenly stop doing banking with the bank. The reason is they will not complain. Earlier they used to complain. Now the Gen Z and the millennials, they don't complain. If they don't like the service and all things, they'll stop it. So can I get a kind of a complete life cycle of that person or those things? Now here it starts with onboarding to steady growth, stagnation, steep increase, decline or rapid decline, depending on different kind of things you can work it out. So you try to get multiple information about that person and you use it also for cross-selling and trying to get everything out there. So this is how it basically works. You label the data. Here is actually a supervised learning, and based on that you can actually try to see what is the trend line this customer is. Individual customer, you can actually get this information. And tell me one thing, don't you think you are very happy when a person calls up with your name and tells you, oh, this is the kind of thing. Personalization is something which is important. Like, have you noticed one difference is, you go to Indigo flight, they will just scan your boarding pass and say bye. But Vistara will actually scan, the name will come and they say, thank you Mr. Jangid. They will actually use that term. It's a small things, but you know, for clients, it goes for a long time. So it can actually advance all these things. So you can see this, what you're seeing is the trend line. Each customer, each point, each dot represents some of it. Okay? And the last one on regular machine learning is product recommendation. This is nothing very simple. Based on the last data, you do a churn reduction and try to say, I'm just telling you, this is the person who buys this also want to buy it. And you may think like this is all very tough. I'm just showing you one example here of the same thing in association rule binding. So I'm trying to connect banking with non-banking use cases. What you're seeing on the screen here, any idea? Employee reimbursement. Okay? What you're seeing on the left hand side are how you do risk management from a perspective of rule-based risk management. That, you know, when we do audit and all things, you know, this happened, then you try to put it as an exception. This happened, you put it as an exception. But the point is that people have become very smart. They know the exception limit is 50,000 rupees. So I spend less than 50,000 rupees. Anything which goes more than that, people will know. What you're seeing on the right hand side is actually a concept called association rule mining. What is association rule mining? If you have bought anything on Amazon, it says people who bought this also bought the other item. It is setting up an association. We are using the same algorithm. It's called a priori. It's a free algorithm. Now, all these algorithms are free of cost. You don't have to pay any money for these algorithms. You are actually trying to say that this many employees are actually doing something funny. The association is not getting or matching up. They are not actually setting it up the right association. If the associations are not right, it means, like I'll give you an example very quickly. Have you heard about a company called Amazon? Amazon has many businesses. One is cloud business, one is their e-commerce business, and do you know they have also Amazon Prime, where they make movies and all the things. Now there are 3 vice presidents of Amazon who have come from Bangalore to Delhi, Mumbai. Each guy's spend is like this. The first guy who is a cloud business, 25,000 rupees he spent on the trip. The second guy spent 30,000, but the third guy spent 90,000 rupees. Don't you think the third guy is an exception because the other 2 guys are? But I have told you 3 information. The first 2 guys are regular vice president who are doing it. But the guy who is actually in Amazon Prime, don't you think he may go to Shah Rukh Khan's house for a, with a bottle of wine to present him up for that because he is into movie business? Don't you think it is possible he will be spending it up? So the 90,000 rupees which is spending is justified. Are you understanding my point? Yes. You can't go rule based say, oh, this rule is broken. You have to see the pattern. What is this guy spending on or what is this guy spending? We are talking about that as an association rule. I'll try to show you just quickly 2 more, and I think I know you are all very tired. Information overload, right? Okay. So I'm showing you some quick use cases on risk management and other things also. NPA prediction, non-performing assets. Can this be done? What is your view? Can you predict a non-performing asset? Actually, if you train your model well, you can do it. How? You can do it using the master data and the transaction data of that person Plus, don't you think if sir is in underwriting, he will know that if there is someone who's coming from an industry which I think is actually going for a bad phase, I will never give money to them. They may have everything good, but I will also see that. So there are internal data set, there are external data set. What I try to do is, I try to bring them all together and let the model decide on that. Okay? Again, this is actually a supervised learning, where some part you have to put it across, some part is already which is going to be done. Once we do that, you can very well give with the accuracy of, how much accuracy we are talking about here? Maximum accuracy is 83 to 84%. But don't you think 83 and 84% is a great accuracy for a bank? That 83% accuracy, I can actually predict it up, which of my loan is going to become NPA. We use the same model in bad debts prediction also. Like there is an FMCG company which has 3 lakh dealers all across India. Now they want to predict which of the dealer is going to become bad debts. You know what concept they are using? Very interesting. Knowledge of the business is very important. They are saying, if a person is continuously using maximum of its rate, payment terms are not, proper, and third, there is many follow-up from the sales managers and all things. This is a pakka trend from our past trend we have seen. This account is going to become a bad debts. I want to, it is like a stop loss which happens in stock market. I want to do a stop loss. I know that, okay, this is already exposure I have. What is the max I can do that it actually don't go further out? Now, humans, the challenge with us is we cannot keep all these things in back of our mind. Let the machine do the kind of redundant work which is there. Keep on doing it continuously and try to do it up. And that is how it is done. They are trying to do it also ATM cash optimization. These are another use cases which people are doing. So they are doing ATM cash order, how much availability and efficiency based on all the transaction which is happening. Let's say Friday, Saturday, Sunday, there is more transaction happens compared to weekdays. Those kind of things, historical data, you can predict it out there. And the last one, this is my favorite right now. You know why this is my favorite? We got so much of issues in this case. Like, branch efficiency. Every bank has their own way of looking at branch efficiency. We sometimes think, oh, this guy has done so much of loans, so he's making a lot of money. But on the other side, he's actually not adding much value in terms of other parameters which are there. So, can we actually try to see the labor, capital and OPEX at each of the thing, trying to bring it out there? I'll tell you where we got this idea. This idea came from a concept of spend analytics. For a multinational company, they wanted us to do a machine learning on all their offices all across the world. They had 67 countries operations. They gave us the location of the place and said, oh, please go and check out each of the location. We'll give you all data. You don't have to visit we'll not visit any of the place. Whatever data you want, we got the data. When we run our model for the first time, you know what happened? Which one was their most expensive branch? We thought it would be either New York, London, Bombay. This will be like expensive unit. It came Indonesia. It is a red flag. How can Indonesia will be there? Then they actually said, no, something is wrong. Either your model is wrong or our data is wrong. They went through the deep dive, then they figured it out there was a huge fraud which was happening. This data never lies. If you take the data right and basically analyze it, you would get a lot of it. This branch efficiency is all about trying to see a 360 degree of that and take it forward. So friends, what I'm trying to bring out here is, I'm sorry I'm jumping into multiple things. The idea is trying to say, what are the different things which are happening? This will be more of my last 2 slides I want to talk about. I know you are, see, human brain can concentrate for maximum 45 minutes. I teach at IIM Bangalore. No sessions are more than 45 minutes. But you are chartered accountant, so you are superhumans. So you can be there for 1.5 to 2 hours. I can understand after, like, do you know how to sleep with eyes open, right? Yes or no? We all know that. And unluckily, see, if you are in Bangalore, MTP, we have MTP hall, management hall. In that, there is a pillar in the middle. So most of the time we'll go behind the pillar. Here there is no pillar, so it's very tough to actually do. Bank relationship with AI and machine learning, I think this is the 5 points which you should remember. Either you can use machine learning and AI as automator. Automator is something you are doing some task, it will just do it faster, better, without any kind of thing. Second, it can help you as a decider. You want to decide whether you want to do it or not do it. Like for example, one of our client is using it to decide that based on Ariba data, which vendor should be selected for which material code. So there are multiple material code. Which vendor should be selected for which material code? Interesting area. It can be a recommender, which means like I think underwriting. You can actually say one level you do it, but there is a human supervision and all things we basically try to figure out. The next two are the most interesting. Illuminator. Some insight which you have never thought of. Can you survive for 5 more minutes? No? Okay. I want to give you one very interesting example here. Illuminator is, my first job was Aditya Group, posted in this cloth. I learned everything about what tailor does and all things, and we understood one very interesting illumination. All over the world, rich people go to tailor, poor people go to ready-made. India is different. India, this is what we learn. India, rich people will go for ready-made, poor people will go to tailor. But if you go any part of the world, rich people will go for tailor because it's like customized which is there. But we found a lot of interesting things. I'll give you one last example, and this will eliminate it. So when you become auditor for the first time, you're full show off like do you remember there is the third year article syndrome? Yeah. So by third year of articleship, you start thinking that you know more than your boss. Your boss is useless guy, and you are running. I'm telling you, all of us had that feeling. First year you think my boss is amazing. Second year you think okay. Third year your boss is useless. You are running the office. Okay. So what happened was, I just was like clear, fresh CA and all thing. I went and Aditya Birla Group is a Marwadi company. So they said 2 things. Risk control matrix, all that bullshit you have to do, that you have to do. But every quarter we want to show, you have to show cost saving or fraud. If you can't show it, 1 year, you're out. So it was a lot of pressure. So I actually found one big issue in my second report. I'll tell you what is the issue. Year, please remember 2002. Do you remember on Doordarshan there used to be a program called Krishi Darshan? Heard about Krishi Darshan? That time only one channel used to come, so 5 o'clock we'll open the TV and watch whatever used to come. Krishi Darshan is for farmers. I was auditor and I found that Louis Philippe, brand manager, has given an ad of 23 lakh to Krishi Darshan program. For 6 months they will play Louis Philippe ads for 23 lakhs. Big amount, 23 lakhs. 6 months, every day Krishi Darshan, they will play this one. So I put it in my audit report, cost saving. I said this is waste of money. Krishi Darshan is for farmer. Do you think farmer will buy 5,000 rupees shirt of Louis Philippe? So don't you think it is like wastage of money? So I was very happy with my audit report. But there is a rule also that every audit report has to be discussed with the auditee before you submit. So I call him, sir, I have to discuss, and he's a very senior guy, brand manager or like CEO of the brand. And I still am in touch with him, he's a nice guy. And he know that I was like, the jumping jack, just became CEO, so I was jumping too much. So he said, okay, let's discuss your report. I said, sir, I have an issue. You guys have spent 23 lakh rupees on this one. You could have done it on Chitrahar and all that kind of program. You remember that music program there, you can get it up. I said, okay, that is your issue? I said, yes sir, that is my issue. And he started like literally illuminating. He said, do you know who watch Krishi Darshan? I said, sir, farmers. He said, what kind of farmers? I said, farmers sir, what farmers? What? He said, see, in India, do you think there is a penetration of TV at every house? I said, no. Which means a farmer can have a TV. It means he is a rich farmer or poor farmer. So yeah, that is the point. If you have a TV at home, you were a rich farmer. He said, do you know Punjab and Godavari belt of this one, there are very, very rich farmers who are there. They are all into farming, but they are very rich. I said, okay, yeah, agree. So, don't you think we should be targeting it? Next 6 months is marriage season in Punjab, Madhya Pradesh, and this one. And we are trying to target them. But I said, sir, instead of that, you could have done an ad in Chitrahar. He said, do you know what is the rate in Chitrahar? I said, no. He said, Chitrahar, the program used to come Wednesday and Sunday. 1 day ad is 3 lakh rupees. 10-second, 20-second ad, 3 lakh rupees. Do you think how much I will get for the 20 lakh? What is the bang for the bucks? But I said, farmers, he said, no, you are wrong. And he actually brought the thing that in rural, like sir was telling Suru, like Sunny Urban and all thing, rural area they used to buy, the rich farmer would buy in the marriage season Louis Philippe shirts. They would spend 5,000 rupees. I don't know if you have gone to Godavari side and all thing. In the marriage season, I will see them wearing, full shirt and mundu. And that marriage season, they will go like that. It's like a 6,000, silk shirt. They will buy it up. People spend money. So I was never aware of that. So the point is that is called illuminator. New ideas which keeps coming and all thing. And the last one is evaluator, which I told you, process mining and taking. So friends, for all these things to work, only thing which I request you to do is to have a transformative mindset. Something like Dr. Devi Shetty, what I explained to you. That is the key for it. The future is bright. I am telling you, don't get scared. Like many times people think, oh, our jobs are going to go away. I am telling you, there is required for more people who understand that and can actually work with that. And that is the reason we should all know about that thing and take it forward. So thank you very much for your patient hearing. So I think we will break for lunch.
Thank you very much, Anand sir. Even though I joined late, I did manage to catch quite a bit of it. You have illuminated everyone here, and I think you also called us supermen and superwomen, which I think is actually going to carry us through. And you say the future is bright for us, you're going to carry us through to the future. AI for us as a part of our audit is slightly, not possible right now, but I'm sure that there are people who are using some kind of tools. I think we should actually move forward and start using tools when we do the bank audits, because the data is there for us to actually work on, and there may be a little bit of reluctance for the branches to give us the opportunity to use the tools, but if we insist, we can use the tools, and the quality of our audit is exponentially going to be much, much better. And there's going to be, again, a lot of resistance for our findings, which we can actually stand confidently upon and say we did evaluate, we used all this, all the terminologies which we learned today, transform our mindset. That is what we need to do. We should not be hesitant to actually use these new age tools. Okay, you did mention some of the Krishi Darshan and Chitrahar. A part of the population here would not have even heard of such things. But the other part has heard and we are able to relate. So we should actually make the bankers relate to us. There is no point in just going there and doing tick, 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 tick. Okay, yes. Do the opening balance verification and let's apply our mind, let's use the tools. I tell you a simple thing of a back-end verification of the interest rates which have been fed into the system. They'll say, no, back office is doing it. They will tell you every single excuse to not allow you to do that checking. Just try and do that checking. You will see how many errors are coming. Okay? And then they say, oh, and then they say, last time auditor did not do all this, why are you doing this? Okay, so we have to equip ourselves, be confident enough to actually stand by what we think we should do and transform their mindset also. Thank you very much, Anand sir. Your talk, as usual, was absolutely mind-blowing. Thank you very much, everyone. I think we have lunch is
Thank you very much, Anand Prakash sir, for the wonderful session. We can now break for lunch and reassemble by 2 o'clock. will take us through automation of concurrent audit of banks. It's my pleasure to introduce Ratnagiri sir. CAS Ratnagiri, a fellow chartered accountant, presently a partner in Mrs. Senpagamurthy and Company, Sivakasi. He is actively involved in software and application development, app development, one of the core team members and admin of hmgforum.com, HMG and open source Windows API for Harbor X-based language. And he has implementing ERP and decision support systems, developed the Android apps and they are in the Google Play Store. He is a faculty member for Information System Audit course in ICI, ITT and Advanced ITT faculty as well of ICI. Presented various papers in seminars with regard to Excel, Power Products, BA and Data Analytics. He is coaching CA students since 2002 and he has released Be Indian Excel template with many Lambda functions. His personal interests are 3D photography, fractals and writing Tamil poems, novels and articles. With this brief, I have great pleasure in presenting before you C.A. Ratnagiri sir. He will take us through automation of concurrent audit of banks. May I now request Arun Singh sir to come forward and present shawl and memento as a token of SIRC's love and affection.
So, very good afternoon, friends. How are you doing? Doing good? Okay. So, I am so happy and proud to be here, friends, on this wonderful seminar. Hope you have got so much of knowledge in the morning sessions. So, our brain is already tired, having so many things. And post-lunch session is a challenging session for whom? Faculties or analysts? Both. Okay. So many things are against you. Environment is against you. My voice is also sweet. So morning you have got so many things. But subject is slightly interesting. So that is against you. They have given me the task of making you awake until 3:30. So let me try to take that as the challenge. Anyway, so let us see, friends. So today the concept of banks are like this. Right? Banks are thinking, we have already introduced CBS, core banking solutions. Every bank is connected. RBI is connected. Every system is pakka. Why there is need of audit? Banks are thinking that. But whenever a fraud is unearthed, immediately who is being pointed? Auditor. Where is the auditor? Especially concurrent auditor or any statutory auditor like that. Okay? Our risk is actually multifolded. At the same time, they are thinking that why there is a need for audit. So, no doubt we can see that we can be eliminated from this. We can never be eliminated from this particular audit area, and especially concurrent audit. But we are taking huge risk when it comes to concurrent audit. Hope you can know about it. But the fees, what they are giving is not, what I can say, correlated to the risk that we are taking. Anyhow, so let us try to use this kind of an automation. Today people are talking, any company or any particular business is having 4 kinds. Since I will be going to the computers, don't worry about it. But I am not seeing how many of you are having computers today, laptop or whatever it is. Oh, these many people, not here. Here I am asking. No. Okay, only few. So, because any technological session should be a workshop. Try to understand. If I am saying something, you will be hearing, but how much you will be making it workable, that's a different point. Anyway, let me try to tell some of the points, and I will go to computers, I will try to demonstrate what I am saying. But my topic is about automating the concurrent audit.
So let me tell you, any business is today having a problem called VUCA. So you might have searched about it: volatility, uncertainty, complexity, ambiguity. So VUCA is there for every business. And to solve this VUCA, 4 problems are there, 4 solutions also there. For VUCA, we have the solution like this: tablets, 4 tablets. Triple A, triple D, triple D, triple I. So triple A, triple D, triple E, triple I. What is that? I will tell you. So triple E is nothing but what? Economically you have to do anything, efficiently you have to do anything, effectively you have to do anything. So that is one part. Okay? If you are doing economically, efficiently, effectively any job, you can survive, okay, as of today. That is one tablet. Triple D, data driven decision making. So don't take any decision by gut feeling. Okay, this company is having, once you are entering into the hall like this, superb AC, 18-degree AC. Okay? You are sitting in the reception, white color sofa, pure white. You are sitting, 1 feet it is going inside. Once you are entering, they are giving a soup. Okay, the owner is coming by 1.5 crores Benz car. You will be thinking, what? This company is doing great, right? So don't take by gut feeling. Always take the decision by what? Data driven decision making. Data driven decision making. Most of the times we should be a makeup remover. Most of the times we should be what? A makeup remover, because when I am taking any photograph, if I am taking my camera and then show it to you, immediately what will you say? Immediately what will you do? Sir, please wait, sir. I make myself ready. Okay. Like that you will say. What is a balance sheet on 31st March, friends? Balance sheet on 31st March is nothing but a photograph taken on 31st March. If I want to show a balance sheet on 31st of March, how much of makeup I should have done, friends? Okay, so concurrent auditors are really makeup removers, because we don't want any fair and lovely balance sheet. We want only true and fair balance sheet. So I want to see what is true and what is fair in this. What is shown is entirely different. So that is why we have to go through. And concurrent auditors are actually making on a daily basis. Nobody can cheat. Daily basis they cannot make the matter. So that is why RBI or any regulatory body is expecting concurrent auditors to give their opinion about anything. Right. So keeping that aside, now I want to talk something about triple A. So we are talking about triple E. Economically you have to do anything, efficiently you have to do anything, effectively you have to do anything. That is triple E, to solve VUCA. And another one is triple D, data driven decision making. You should actually take a decision based on data, not on some gut feeling. Then number 3, triple A. What is this triple A, friends? Analytics, automation, and then artificial intelligence. A. So what is analytics? What is automation? What is A? Artificial intelligence. All these 3 are entirely different. So last one is triple I. What is this triple I? You have to properly improve, innovate, and information. That is not related to audit. Let us forget about it. So for our audit, we need triple A. In that triple A, they have given one particular part for us. So automation, artificial intelligence, analytics. So out of that triple A, how many people are using all the 3 here? Can you raise your hands? I am using analytics, I am using automation, I am using artificial intelligence also. Anybody, friends? Are you using ChatGPT? How many of you are using ChatGPT? Okay, so you are started using what? Artificial intelligence. Okay. So how many of you are using some kind of VBA macro or RPA? Have you ever seen RPA? Robotic process automation. Sir is raising. Okay. So already you have covered 2, sir. So what about the third one, sir? Analytics. You might have already done. So that means give him a good hand. He is already doing all the 3. Maybe he is not raising his hand, but you may also be like this. So start using this. What are the 3 techniques, sir? Analytics, automation, artificial intelligence. All these three are today helping for us. Okay? But the topic given to me is mainly automating. So what do you want to automate? Analytics you want to automate. Not the transaction. Transaction is already automated. UPI, so many things are happening. So I want to automate my own process. In other words, robotic process automation is something happening, but I want audit process automation. Because the bank is not giving me that much of maybe income or whatever it is. Most of the times you can see it is a repetitive job. Repeatedly you are doing something. If you are doing something repeatedly, you have to give it to a system. Why should you do it again? Why should you do it daily? Example I will tell you, friends. In my office, the bank manager is calling me, sir, I have sent the files whatever you want in text format. Please give me the report. 5 minutes before only he had sent it. They are rushing, sir, please give me the report, sir. Sir. When they are asking, they are not giving. But when they are asking, you have to give. That's the concept is that. Today what I am saying, friends, when he is asking me like this, I am saying like this, no sir, we have already sent the report. Bank manager is saying, sir, only 5 minutes before we have sent it. We are saying 4 minutes before only we have sent it. See the difference. That is the concept of automation. So automating your audit process, whatever maybe your audit exceptions, whatever maybe your point for that particular bank and all, only one, for example, concurrent audit is not for month-on-month basis, right? Minimum how many years they are giving? 12 months at least, right? So 12 months they are giving. First month is the most important month, I think you can understand. Okay? When you are entering into that branch, you have to see what is the risk involved in this particular branch. Every branch is having its own kind of risk. So you have to identify what is that kind of risk and all. Okay? So that's the point. Now first month is the very important month. Now the next month onwards, only data comes. You have to verify is there anything changes and all happened, and then you have to give the report. That's all right. Most of the times it is like that only. So after first month, 11 times you are doing only what? Repeatedly the same job. So whether you are automating the statutory audit or not, you have to automate what? Concurrent audit. That is why they have given this particular topic today. So what are the automation tools that we can use? Let us tightly enter into our subject. Okay? Are you ready, friends? So how many of you are using Office 365 here? Raise your hands. I am having Office 365. Very good. So what about others, friends? What is your versions? Can you tell me? Others, those who have not raised. Okay, so started using Office 365. Let me say, there are 3 revolutions happened in Office 365, whether you have recognized or not. That is the question I want to ask. So, first question. Have you started using a concept called in Excel? Especially I want to talk about Excel. How many of us are started using Excel in a proper way? Because using Excel, we are doing all the automation. Entire automation in our office, concurrent audit. We are taking concurrent audit of about 6 or 7 banks, various branches also, where we are doing automation only by what? Excel. Excel itself is enough, sir. No other tool is required. Today, what is the cost of that Excel? Okay. So you can get even for 300 rupees, 6,200 rupees on family edition. You can share it with 5. And that person can install in 5 devices. So it is, even though if you are an official Excel with a 1 TB cloud space, it is only 300 rupees per system. So if you have not started using it properly, then even if I am giving any other tool also, how will you do it? Already you are having that tool itself you are not perfectly utilizing, then how will you do for a new tool? So first start utilizing the tools available in our hands. Entire automation we can do by Excel alone. This side you give the data, this side you get the tool. Such a kind of tool today is Excel. Start using that. Let me tell you some of the features of Excel today which is making it possible. So have you ever heard about a concept called dynamic array? If you have not started using dynamic array, then you are in 2000. Okay, because in Excel 2000 only you are using. So even though you may be using Office 365, but if you are not using this concept of dynamic array, then you have not even started the audit. That's what you can say. Anyway, let me try to showcase you what is this dynamic array and all. Second important aspect, Power Query. How many of you started using it? Sir is raising sir. You are also started using it. Then you can also say that yes, automation is somewhat possible. Yes, sir. Yes. Month on month they can give me any text file. Let them give me any format, any text file. One time only we are writing some Power Query. That's all. Month on month your data has been pulled in. Whatever you want to do, you start doing it. So before bringing the data into Excel, Power Query. After bringing the data to Excel, dynamic array. That's all. Problem solved. Any report is solved. So if you have started using Power Query, start using also what? Dynamic array concept, then your problem will be solved. Entire problem, automation is over. With reference to concurrent, because every branch is having different kind of what? Setup, different kind of expectation, different kind of our own approach also. Okay? Our own approach is also different from one auditor to one charter, one to another charter. So that is why there cannot be a standardized format, standardized action plan. But still, we have to make use of the tool properly. So these two tools, what are the tools I have told? Dynamic array and Power Query. So let me try to showcase one particular aspect of Power Query, then we can move on. Okay? Yes. So can you connect, sir?
Yes.
No, this is good. Let me try to. Here it is. So let me open one file, friends. How the bankers are giving the file to us. And just to open it. So this is the kind of a file our bankers are giving to us. Okay. So this is a kind of a file bankers are giving to us. Please see this file. Let me try to zoom this for you. So in this file, friends, you can see it is a statement of doubtful assets. Statement of doubtful assets. You can see how many columns are there? 12, 13, 14, 15. There are 15 columns, right? You will be very much happy if they are giving like this. Data is somewhat structured, but don't be happy. What they are doing, let me show you. Okay? After the 15, let us see how this text file is so complicated. Let me show you. After the 15, you are having 16th column in the bottom. Okay, 16th column to how many columns? It is going towards 31st column. Okay. So first part is 15 columns, then second part is 31 columns. Okay. 15, 1 to 15, 16 to 31. Okay, that's good. Then at least it is giving the entire data. No. What are they doing is like this. Please see here. The serial number is coming from 26, 22, then you are having one line break. Okay. It is not so easy for us to do the analysis. That's how they are preparing, I think so. We should not give the data as easy as for the auditors. We should give that much of trouble so that they cannot see the data properly. I think that should be the only intention of banks. But anyway, so whatever the way they give, we don't bother. That's the point. So 26. Then again serial number 1 comes. Okay. Again serial number 1. Okay, good. After this 26, what happens? 27 starts. 27 of the first column. Okay. Then 27 to, sometimes you are having 1 line break, sometimes you are having 2 lines break. Sometimes you are having 3 lines break. So the serial number is also not continuous. So such a kind of statement it is. But they are asking a question, immediately giving some 9,000 accounts and immediately giving the report. How is it possible? Humanly impossible, you may be thinking. But today's concept of Power Query is making cutting like a cake. Just cutting like a cake. Next month, one time I'm creating this Power Query. Next month onwards, this file comes or any file like this comes, system will throw it just like that. So that is the power of what? Power Query today. And let me tell you friends, not only Power Query, 5 power products have been introduced by Microsoft. Have you started using it? If you are going for Microsoft 365, already 5 products are given by Microsoft. Power, Pivot, Power Query, Power BI, Power Automate, Power Apps. Totally 5 applications friends. All the 5 applications are free if you are using Office 365. So why you have not started using it? So start using this kind of products. Today's concept is like this friends. What is the Tarak mantra of today's concept is, already there are umpty number of coding available. Concept is no coding, low coding. So what is the concept? No coding, low coding. I don't want to write any code. I don't want to write any formula. Already all the formulas are written in this world. Enough. Enough is enough. That kind of situation has come. Saturation point for coding. And my humble request friends, other 2 languages, not languages, other 2 aspects we must know is Python and R. R language is exclusively for data analytics. Don't think that it is not for me. I am not a tech guy. I cannot learn this. Never think like that. Because today's concept is no coding, low coding. You need not code anything. You need not write any coding at all. But still you can use it properly. The only thing is how you have learned Excel. That's how you have to learn what? This R language and Python also. You need not code anything. How to run a code, that's it. How to get the coding and then run. All the codings are already available friends. Python is one of the languages which is developed by all the people in this globe. Like Wikipedia. So it is like Wikipedia, how it is a collection of world intelligence. Likewise you can see collection of world's coding. Totally free. Evolving language. Why don't you download this? Start using it. So it is like the river is having that much of water. You just get it and then use it. That's all. Such a kind of tool. You need not code anything. Anyway, so Python and R. R is actually exclusively for data analytics. Let us come to the analytics part slightly later. First of all, let us see the automation. Python can also be used for automating huge data. See, when it comes for a small text file like this, for concurrent audit, I think we don't get full data of the bank. So that's why Python may not be required, but Power Query is definitely required for it. So that this kind of data can be, what is the purpose of Power Query friends? Extract, transform and load. So ETL. So wherever you are, see whatever may be the data, we can extract any PDF file, text file, JSON file, any file. You please give me any file. Let us try to automate it. That is the concept of what I can say, Power Query. And then Power Automate, whether they will allow us, I don't know. How many of us started using Power Automate friends? As already told. RPA tool. So I am not degrading you friends. It is not about degrading you. But let me tell you, technology is an ass. Technology is an ass. If you go beyond it, it will bite you. If you go behind it, it will kick you also. You have to go along with what? Technology. So you have to go along with what? Technology only. So you have to see what is happening in this world. Along with that you go. Otherwise you will be getting the trouble. Okay? So that is why today's concept is automation. Today's concept is analytics. Today's concept is artificial intelligence. Go along with it. And it is not that much hard friends. We are already fundamentally strong with Excel and all. So if you are having fundamentally strong thing, see my hair. If I can learn, why can't you learn? Okay, so that is the kind of inspiration you will get. So if I can learn Python or artificial intelligence, Power Automate, Power Query, so like that, if you are having that kind of challenging cuts, definitely you can do it friends. If I can do, you can do. Definitely. So that is the concept, and today it is user friendly. People are not making anything for what? Troubling anybody. So it is simply user friendly. You have to start using it. Power Automate, you take. Start using it. So every time the bank is giving me a mail, that mail should be automatically saving one file in my folder. That folder will be taken by Power Query. Your report is also. That's all. You don't need anything. So you are creating a bot by yourself, watching this Gmail ID. Every time the bank gives me any file with an attachment of this is the file name or this is the file name starting letter, anything you tell, system will automatically post it in this folder. Then the folder will be taken by Power Query, report is ready. So such a kind of things are happening today. We need not touch anything. Repeatedly, if you are doing any job, friends, that is what I am repeatedly am telling you. So first time when you are doing okay, second time also okay, but third time if you are doing something, same thing, think about it, stop. Why should I do it again and again? Let us give it to the system. For that, there are so many products available, especially Power Automate and Power Query, these two. So these two products are Microsoft designed one, user friendly. Since we are, I hope everybody is using Microsoft Windows, so it will be very easy for you to operate. Otherwise, you can use UiPath also for Power Automation. Better thing is Power Automate first. So Power Query, Power Automate. Two things I have told how to automate. Along with the Excel, you can do wonders. Right. So let us talk about. I will show you how to create such a kind of Power Query. I have created a Power Query in such a way that if you are giving this file as the input, it will give me what? A wonderful Excel file. Okay, let me show you. So if you have brought your own laptops, I would have given this Power Query also for you. Is there anything possible to share? If I am giving this file, sir. Sir.
Yes.
People after the class.
Sure.
After the class, I will send this text file along with this Power Query file. You please see how it is working. Okay. So let me try to open it in Power Query friends. So this is the file. Hope you can see it. I will zoom it. 1 minute. Okay, so this is the file. That file is being made into this file. Please see this. How beautifully it is now making all the 32 columns very simply. So whatever may be the pointer, now you can see some 985 records are there. All of them are making only by what? 31 columns. Not by 15, 16, something like that. So this is the file. Let me show you the Power Query. Data. Okay, let me try to enable this. So go to data. Usually we go for what? Right hand side, okay? Text to columns. So in Excel we usually go to text to columns, but we are all Indians, okay? We Indians should always keep left, don't keep right. So always keep left from today onwards, never go to right side of the Excel. Text to columns, okay? That button, forget about it. So we can select what? We can select get data. I am going for launch the Power Query editor. So how many queries I have written, please see this. For this file, it took me these many queries to make it proper. So this is the starting position of that file. How many steps I have done? So starting from here, it has come to this level, final level. But friends, do you think that these many steps and these many things, how much time it took, sir? That is another point we have to answer, right? How much time it took? It took about 20 minutes for me. All these steps, 20 minutes. So it is not that much hard as you are thinking. So let me tell you, if you can manually do it something, that can be done by Power Query easily. No coding, low coding, no formula, nothing. What I have to do, I have to say. So you have to cut this, you have to make it 15 columns you have to make like this, then these numbers you try to follow. So manually, how will you think about it? So if I am given the data like this, manually what will I do? That step by step, if you are giving, all the steps are here, right? Reordering the columns or something like that, you can do it easily. That is why I told to Arun sir, this should be a workshop time. I should give the file previously, you should bring your system, we can do one by one, or you have to bring your own problem, then we can solve it. That is the kind of course we should have when you are coming for technology. Okay? So, in my opinion, friends, or let me ask you this basic question, friends. In your opinion, out of 100 chartered accountants, how many are IT enabled, friends? See, going to a computer, opening the system, going to browser, seeing YouTube, seeing the mail is not IT enabled. So what is IT enabled? You are doing your entire operations of your office by using computers. Out of 100, how many can be? Can you give a guess? In my opinion, okay, this is my opinion, personal opinion, it may be more or less 5 to 7%. 5 to 7%. So we have a long way to go, friends. We have a long way to go. So either you go to adopt the technology or you go to employ a person who knows the technology. Otherwise, very, very important, very, very hard, friends, to survive today. So my humble request, adopt technology. Why I am saying this? Every profession is encroached by IT today. Every profession is encroached. And if you go to top 10 paid jobs, data scientist is the first job. Go to top, that is a World Economic Forum, and search for it. So top 10 paid jobs is data scientist the first. And top losing 10. First one is data entry operator. The role of operator is gone. Okay. What is the second one? The accountant. So you can go and see. I am not saying something lie. 90-20 is the composition. 90-10 is the composition. 90% technology has encroached us. Only 10% is our expertise. Nobody can throw away us. But still, if you are not learning technology, very, very hard. Anyway, so update yourself first. If you are not updated, you are outdated. So I am talking about this Power Query. I cannot teach Power Query today because this is not the forum to teach. You are not having the system and all. But I am telling you very seriously, you have to learn what? Power Query. So either you are learning a Power Query or not, at least your office staff should be doing. Because we are not going to, what I can say, import the data and clean the data. This is not the job of us. So if you are a single practitioner, you should be learning Power Query. If you are having office staff, they should be trained in what? Power Query. Otherwise, your time, their time, everybody's time will be wasted. Yes. Right. So I was talking about Power Query. Now I am coming to analytics. So automation, how to get the data, I have told. How to analyze the data, let us see. Please hear, friends, today, once I have brought this data into Excel, then what to do? So let me close and load this. I am having the data, friends. We try to submit. So this is the data I am having. So this one is the date or whatever it is. And this one is the loan amount, something like that. Okay. We can keep like this. Now friends, this particular table, why it is in green color? Can you tell me why it is in green color? Excel. Usually, let me ask this question. It's an Excel class, think about it. Control T, if you are pressing, what does it mean? Table. Control T means table. When you are pressing Control T, the table will be in which color? Blue color. Why it is in green color? This is the question I am asking. Now can you connect? Usually Excel tables are which color? Blue color. Why this is in green color? Do you think the diagram changed? No, right? So usually blue color tables are tables created from the data inside Excel. If it is green color, it is external data. Green color means what? External. From the data is not coming from inside, the data is coming from outside. So the data is connected to something. Let me show you. If I go to this particular screen, table design, you can see that there is one button called unlink. Can you see this button? Unlink. What does it mean unlink? Disconnect this table from a server. Where is the server? There is no server here. Where is the server? The text file is the server. The text file is the server. So whenever you are changing any data in the server, the file should change here. The same way, whenever you are changing anything in the text file, here also it will change. So that is why I am saying entire thing is automated. Once you are putting the input, actually if you are asking what is Power Query, I can say process flow modeling software. What is Power Query, friends? Process flow modeling software. You are modeling an engine in such a way that if I am giving this as the input, I want this as the output. That's all. So I am giving this test file, I want that table, Excel table. So until you are bringing the data into Excel, we are using Power Query. As you can see, it is a table created by Power Query. It is in the form of a table. What is the advantage of table in Excel? Any idea, friends? Example I tell you, please here. If you are using Excel Office 365, please try to go and see this. So here I have given the table name is what? Final. My table name is final report file. So let me go to a new sheet. Have you ever seen such a kind of formula in your Excel? Please see here. If I am saying equal to final, the name of the table is what? Final. If I am typing equal to final, I am getting this much. Okay. So if that particular table is changing, here what will change? Entire table is also changing. Anyway, so one cell only you have deleted, all the cells are deleted. See the power of this Excel today. So now I want to ask these questions, whether you have updated properly your Excel. How many of you are using Ctrl-C, Ctrl-V in Excel? What is the purpose of using Ctrl-C, Ctrl-V, sir? Copy paste. If you are doing copy paste, then you are there 2000. Okay. So let me give you another shortcut key. Ctrl-Shift down arrow, right arrow. Ctrl-Shift down arrow, right arrow. It's service control. Selecting the entire range. If you are using that button, you are in 2000. Okay. Let me tell you another one. Pressing F4 key when you are writing a formula. When you are writing a formula, pressing F4 key. Freezing some cell. Okay. Relative reference, absolute reference, dollar symbol, mixed reference. If you are using that, you are in 2000. Whenever your hand goes to F4, you are in 2000. Think about it. So today's Excel entirely different. Companies are 1956 to 2013 on top. இன்னமும் நீங்க எதை யூஸ் பண்ணிட்டு இருக்காது. You should not use the Companies Act 1956. 3 revolutions happened in Excel. One is dynamic array. Second one is what? Power Query. The third revolution. Second revolution is let and lambda. Let and lambda. How many of you have started using let function and lambda function? Which is I know more. So didn't get past. What are these things? We don't even know. Okay. So let me tell you, friends, all these are making the users very simple. The Excel is made so simple, friends. So you should be started using it. You should be started using it. Anyway, so let me tell you what is the purpose of this dynamic array. So table is dynamic. Table is dynamic. But Excel formulas were not dynamic. Let me tell you one situation. Try to understand. What is the concept of dynamic array? I want to say because time is very short for me. So at least one thing I will tell you. Dynamic array concept. So dynamic array concept is actually doing what? What is the theme of this first revolution? Data became dynamic, so is Excel. Data became dynamic, so is Excel. Why it is like this? Let me tell you. I'll give a situation. Sir, this file, this table is available. You have got some 5 filters applied. Region is equal to East, agricultural loan, or something like that. You have filtered 5 filters. Now I am adding another 100 records in the bottom. Table gets automatically expanded, but whether the filters are automatically applied or you have to reapply the formula, all the filters. You have to reapply. Can you understand? Remove all the filters. Again you have to apply 5 filters. This is the problem. Okay. Second problem that we are having, or that we were having. So I have applied 5 filters. I want this report, and then I want to apply another 3 filters. What will I do? First I will apply 5 filters, copy the entire report, paste it in a new sheet, then I will remove the filter, I will apply another 3 filters. Hope you can understand. But next month what will you do? Again you have to apply 5 filters, copy the data, paste it there. So this is what you are repeatedly doing month on month. India has gone from VAT to GST. What is the difference between VAT and GST? VAT is source-based taxation. GST is destination-based taxation, or which state is consuming, that state is paying the tax. Now friends, think about it. The Excel has gone from VAT to GST. The Excel has gone from VAT to GST. How I am saying, what I am saying friends, when I am writing this formula equal to final, source data is there only. I will never go to source data again. Source based taxation, we are now using what? Destination based reporting. Source based reporting was there. 3 formulas, 5 filters, something like that. We will never go to the source again. Whatever the report I want it in this place. In this place, okay? All the filters you apply here. Example, let me tell you, I want to find all the loan amounts which are greater than 10 lakhs or 1 lakh. Let us try to see. I am writing a formula like this today. Okay? Please see this friends. Actually column 9 is the amount. Okay? Can you see this? Column number 9 is amount. I am writing this formula equal to filter the final report, where final report column number 9, I need not even know about the table letters. Okay. Column number 9 is greater than 1 lakh. That's all friends. All the amounts greater than 1 lakh is been already coming. So if you are not knowing this kind of formulas, I am so sorry for you. So this is the kind of a formula I have written. Have you ever written such a kind of formula? Okay? Wherever you want, in this place I want a report, I will write a filter. In this page, so whenever you are modifying the source data, what will happen here? That's right. The report is ready. See the power of this. Such a kind of a tool. Okay? So let us see, is there any category available? Okay? So let us see, is there any category available? So for example, okay, so here I am having some categories, agricultural, commercial. Okay, let us find out. This is in column number 10. So let me find out what kind of loans they are given. All these are dynamic. That is why it's called what? Dynamic array. So I am writing this formula equal to unique of, sort of unique, let us put. So sort of unique of final table, column number 10 or 11, I think so. 10, right? So column number 10 I want. I am getting all the kinds of loans here. What are the various kinds of loans available? Okay, this is about not loans, it is about the security, I think so. Let me see. Any other column here? Type of. Let me see from the text file itself. It's a doubtful asset. See what are the kinds of securities they are given, we were saying. I think the type of loan is not used. Okay, so type of security code and account number. I think it is the 50th column. Let me see the 50th column. Okay, I think this is the code number. Column number 7, what is it? Type of account is there. Okay. So first column, second, third, fourth, fifth, sixth, seventh column is the type of account. Let us see the type of account as a number. So seventh column is the type of account. Let me put the seventh column. See the formula. There is a blue color border. Can you see that? There is a blue color border. Let me show you how it is working. Before that, let me show you the column number 7 for you. It is giving me various types of accounts. Okay, what is it available and all? Very limited numbers. Okay. You can see only 52 types of numbers are here. So it is removing the duplicates always and finding the list of all the items. If I want the customer names, who are the customer names, we can do. Customer names, how many count is available, let us see. Okay. So like that we can do all these things. Okay. For example, let me take every customer, how many times he had come. Let us see. So here this is the sheet we are having where the customer name is available in the second column. So I want to find out who are the customers and let us see how many times the customer names are duplicated. So let us say equal to sort of unique of final table column number 2. So like this we write all the formulas for reports friends. We are not writing any pivot table and all. Now can you see? In the summary like this, all the customers are coming from A to Z. So now today we are having another, I'll show you. I am going to show you one surprise for you. How many of you have seen this? I don't know. Please see this. Today we are having a formula called pivot table. So pivot table itself is what? A formula today. So pivot by which I want to pivot? Final table column number 2, which is the name of the customers, and I want to find out which is the column field type. The type may be number 7, I think so, right? Number 7. So final table column number 7. Like that I can give. So one time only I am writing this formula. Next time onwards system will create the pivot table. I need not even refresh. Usually in pivot table we need to refresh the table. That itself is also done. So value here, I want to say final column number 9, I think. That is the value. So what I want to do? I want to do the sum. So can you see this? Totally it has pivoted the entire data. So any particular column, what are the types? So by type, how it is? All these things are can be possible. So pivot by function. So today's Excel is having these many functions, and let me show you about this dynamism concept. Why Excel has brought this dynamic? Alright. Today we are not going by source data, we are going by destination. Wherever you want, you pull the data and then do it. So otherwise you are always doing the filtering in the source only, sorting in the source only, filter, sort, all these are now functions, not features. So we are calling the formula and then do it. Okay? So today's Excel, you should be learning about new functions which has come. Let me list out some of the functions. Do you know about these functions? Let us ask. Okay? Please see this. I am going to at least list out these functions. Please try to go and search about it, or you can learn about it. Let me tell you one simple situation, friends. How powerful Excel today is, I will show you. I am typing like this, okay, some data. So much. I am just typing marks of some students, okay, roll number, name, mark 1, mark 2. Roll number is 1, name is Giri, mark is 4556. roll number is 2, name is let us say Hari, 56, 67, maybe like that. Roll number is 3, name is Xavier, some 45, 65, some marks I have entered. Now you may be thinking, which idiot will enter the data like this? But you are having a PDF file, you are seeing a PDF file with a wonderful table, you try to copy the data and you try to paste. How many of you are seeing like this? Hope you can understand. So this is today's problem, right? How will you solve? I can use Power Query also, but see the power of today's Excel, friends. Today I am writing this formula equal to wrap the rows. Wrap rows. Entire data. Okay. Wrap these rows. This formula I am entering. Okay, so wrap rows, comma, 4 columns. My table is having how many columns? 4 columns. So wrap these rows into 4 columns. So if you don't know this, what can I do? So that's why I am saying today's Excel, today's problem, today's solutions. So let me list out some of the functions which are regularly we are using. Try to make use of it, friends. Okay. So some of the functions that you must know in the dynamic array concept. So I am going to list it out, please watch. All these are helping us to automate our job. Okay. So learning this function is not that much hard. Just type it, that's it. You will understand. It's not very much hard. Just to know that these functions are available, these are all very much useful for you. Okay. So I will type these formulas. Today we are not even using VLOOKUP. How many of you have started using XLOOKUP? Raise your hands. Sir, super sir. Okay, so some people have done it. So XLOOKUP, XMatch. So ifs, max ifs, min ifs, XR, then sequence, trim main, okay, text join, so I'll list out here this side. So sort by, filter XML, unique, let lambda, forecast.linear, forecast.ets.asterisk. Scan, map, reduce, by row, by call, make array. So wrap rows, wrap calls, choose rows, choose calls, H stack, V stack, take, drop, expand, do row, do call, text split, text before, text after. So these are some of the functions. I will share it, sir. Share this file with you. So this Excel file I will share. Please go on the search file. So all these functions, friends, my humble request, with folded hands, you must learn. So this is our own Excel only. So So we must learn at least the Excel we have to update ourselves. Why these functions are there? As I have told you, friends, one-time learning only. So it is a one-time operation. Let me tell you, how many of you have used Lotus 1, 2, 3, sir? Raise your hands. See, Lotus 1, 2, 3. From the days of 1970s until 2016, total Excel functions are 300, sir. Total Excel functions are how many? 300 only. But 2016 to 2023, they have introduced 50 functions. 50 வருஷத்துல 300 ஃபங்க்ஷன் தான் வந்துச்சு. But this 2016 to 2023 50 functions. Why this much is required? Because data became dynamic, so is Excel. One time only. These many functions will never come again. One time I want to change. For example, Companies Act 1956 was there. One time we have changed to 2013 because I have to modify. I have to do away with the old thing. பழையன கழிதலும் புதியன புகுதலும் வலுவல கால வகையினான. So according to the time, something new will come, new should come. That is the right thing. So we have to adapt to the new thing. So what is new? We have to understand. Data became dynamic. Previously data might not be dynamic. We were seeing yearly balance sheet. We were seeing monthly balance sheet. Now transaction balance sheet I am seeing. So then I have to do what? Automation. Then I need what? Dynamism. So that dynamic array has brought everything Excel dynamic. From the static reports to dynamic reports. Going towards dashboarding. So using Power Query and Excel, that is enough to create the dashboard. And my humble request, you create audit dashboard for your concurrent audit, because month on month you are going to get the data. Even daily also sometimes you are going to very big branches and then take the data. Better to use what? Create your own dashboard. So you are not going to give to anyone, but you have to find yourself. And let me tell about analytics. Okay? So automation, I think I have made some points here. Very important formulas are let to lambda, sort to sort by filter, wrap rows, wrap calls, like that I have told. So this requires some kind of what? One or 2 days you have to spend on it. This purpose of this function and all, you have to spend on it. You will definitely enjoy it. So once you have understood the concept of dynamic array, you will enjoy Excel. So as I have told you, you will never press what? Control shift down arrow, right arrow, Control C, Control V, F4 key. எதுவுமே யூஸ் பண்ணல. Today we are not even using these functions. Keys. Sitting here, any report, I am writing simple formulas, I am getting it. So that is how it is, and one time only I am writing that formula. Next time onwards, system is bringing to me, automating the concurrent. So you will enjoy it. You will analyze the truth. Okay, for example, let me tell you, in auditing paper you might have heard this particular sentence which says, auditor should not spend his effective time on operational matters. Auditor should spend his time on analytical matters. See, getting the file, getting the CSV file, split the column, and then text to column. இதெல்லாம் நம்ம வேலை சார். We are all not IT experts. We are all accounting experts only. So you are not expected to be what? An IT expert. We should not be an IT expert. So that is why today's tools are like that. And why they have added this word power? I have given power products, 5 products. Power Query, Power BI, Power Pivot, and then Power Automate, Power Apps. Why they have given this power? What kind of power it is having? Just they have copied from the cars. Steering, power steering. Brake, power brake. Windows, power windows. Likewise, previously queries were designed by developers. Today users are creating the query. That is why Power Query. Previously drivers only driven the car. Today self-driving cars. Okay? We are driving the cars ourselves. There is no concept of putting a person for driving. Likewise, there is no query developer. We are the query creators. So that's why Power Query. Likewise, previously pivot was there. Now it is Power Query. So you should be seeing what is that power. So much of enormous power is now available in Excel. Properly utilize Excel. That is enough. Okay. So that is one point. Let us come to which level then. Next point is analytics. So how much time am I saying? 15 more minutes. Okay. So let us talk about analytics, friends. Somewhat concept of analytics. Then we'll even talk about artificial intelligence also. How much of artificial intelligence we can use it with reference to concurrent audit is a very big question. But we should not give the confidential information to ChatGPT and all. We should never do that. Don't do that also. But we can ask ChatGPT in a kind of a way, create a formula for me. Super adima sikirga. Wonderful slave for us. You ask it properly. That is the question. If you are asking properly, you can get the answer also properly. So friends, For the past 2 or 3 months, ChatGPT is creating the formula for any Excel form. You tell the situation, Excel formulas, even unique lambda function, anything is creating by what? ChatGPT, and the level of ChatGPT creating the formulas are really nice. So you have to ask proper question, that's the point. If you are asking a question properly, every complicated formula it can create. Okay, that's why it is better to use ChatGPT also while creating the formulas. For that you need to know what to do. If you know what to do, system can do how to do. So that is the point. Okay, so that's why I am not coming for artificial intelligence, but let us see the very important area, analytics. So why we need this analytics? See friends, as a chartered accountant today, you are not expected to do audit sampling. You have to do what? 100% verification. Today it is possible because of computers. You are having computers in your hand, you are having the table also in your hand, you put the proper, maybe the problem, the system can do all the audit. 100% verification is possible. So that is why you want to ask properly. Analytics is possible by using computers for 100% sampling, not for 1 or 2 accounts. So you want to ask the question properly, right? So when it comes for analytics, what are the various kinds of analytics? Any idea about analytics? What is analysis? What is analytics? Any idea, please? Okay, so let me try to say like this. According to Webster Dictionary, Oxford Dictionary, analysis means in-depth examination of something. What is analytics? A method of analysis. This is what dictionary says. Dictionary says analysis means in-depth examination. Analytics means a method of analysis. That's all. But friends, last 10 to 15 years, the difference between these two words has been made to mountain to valley. Such a kind of difference it has been made by computer field. People are saying that analysis is here, analytics is here, data analytics. According to English dictionary, there is no main difference. But my humble request, today, don't accept as Ratnagiri says, you go and search for in the internet, difference between, note it down and then please search it, difference between analysis and analytics, how people are talking about it. What is this people are talking about? So, what is analysis, what is analytics? Let me try to give it with a very simple example, simple definition, friends. Analysis is nothing but knowing what you are seeing and you are saying. Analytics is not knowing what you are saying and you are saying. Let me repeat again. What is analysis? I know what I am saying and I am saying. That is analysis. I don't know what I am saying, but I am saying. That is analytics. Let me give an example, friends. So you are giving your blood to the lab. They are finding B positive or sugar level, pressure level, all this. Okay? So is there any other group possible other than these groups? No. So they know about what is normal level of sugar and pressure? Yes. So they know what they are doing and they are seeing. That's why it's called lab analysis. Current ratio, what is the formula? Current asset divided by current liabilities. Normal range is 2:1. I know what I am seeing. I know liquidity. I know stability. I know solvency. What I am knowing, I am seeing. That is nothing but called what? Ratio analysis. So what is analysis then? I know what I am seeing and I am seeing. But what is analytics, friends? I don't know what I am seeing and I am seeing. Let me give you an example. The same lab, same microscope. Now I am having a coronavirus, not I am, the lab. So they are having a coronavirus. I want to find a vaccination. I don't know what I am seeing, but I am seeing. This is the concept of what? Analytics. Let me give our own case. Somebody is giving you a book. Do you know, is there any fraud? No. Is there any formula to find the fraud? No. Are you seeing it or not? Yes. That is nothing but what? Analytical reasoning. So, see the difference. What is data analytics, friends? I don't know what I am seeing but I am seeing. Okay? So I don't know whether it is there or not, but still I am seeing. That is the concept of analytics. So where analysis ends, there analytics starts. எனக்கு தெரிஞ்சதெல்லாம் பார்த்து முடிச்சிட்டேன் சார், இன்னும் என்ன இருக்குன்னு தெரியல, பார்க்குறேன், அதான் என்ன analytics. For that you need what, friends? For that you need what? Experience, creativity, imagination. Pampingal, Pampari. You should be knowing what? You should be a criminal mind. You should not do a criminal. But the point is, you should be having such kind of how criminal will work. So, that is why. Anyway, friends, let me come to that point later. Now, the point is what? I was saying that whatever you are knowing, that is analysis. Whatever you are not knowing is analytics. So, that's what I want to find. That is why people are giving so much of money to their scientists. So, data scientist, in the data, if you can unearth something new, you are becoming a data scientist. So, not knowing, nobody is knowing it, but you are identifying. That is why you are giving more money. So, try to think about it. Experience is required, creativity is required, imagination is required, passion is required. Fifth point is intuition. All these things are required, friends. Let me tell you about my child proudly. Once he enters into the audit, bank audit expense, 31st March, accounts will be over. I was article clerk in 93, 96. Okay? So during that period, I was going along with my child. He will enter this hall, friends, like this. The branch all along. Another branch, okay, let us see. So, such a kind of intuition. So, in this room, do you have FM radio signal or not? 106.4, 100.5, Chennai FM. All these signals are available or not, friends? Why are we not hearing it? We don't have the receptor. If you have the receptor, you will get what? The intuition. Oh my God, this office is not good. This office is right. When will you get it, friends? Passion, experience. You should have such a kind of experience and passion towards your profession, it will automatically come to you. That's what I am saying. Okay? You need such kind of what? Intuition. It is not gut feeling. There is a minute difference between what? Gut feeling and intuition. உங்க உள்ளு உணர்வு சொல்லணும், பேசணும். Vibration is there, that you have to receive. If you can receive it, that is the concept of analytics. Slightly going towards knowledge to wisdom. Knowledge is we know, wisdom we try to attain. That is the concept of analytics. So, that is, you can definitely do it if you are really having, regularly seeing this audit, concurrent audit or any kind of audit, definitely you will have it. Over a period of time, experience will definitely make you, but mere experience will not make you what? Wise. So, apart from experience, for example, I am seeing a coronavirus, can I find the vaccine, friends? I should have some experience with other virus also. I should be knowing various substances. I should know what will happen for any other substance. Like that, we have to get that experience, wisdom. I should have an intuition also, then only we can find. Same way data analytics is working. So, in my opinion, in this area only we have to go further. Okay? So, as chartered accountants, we are not expected to do something repeatedly. So, we have to analyze the data and come to a conclusion. So, in this area only we have to make a movement. Let me tell you various kinds of data analytics available today, and you try to go through various tools are also available. I will at least name them. If at all a particular workshop may be created, we can say full day all along with some kind of sample data, we start doing what? Analytics. Okay? So various kinds of data analytics, let us see. Sir, please stop me if the time is up. Okay. So various kinds of data analytics today. So one is called DDA. So this DDA is called descriptive data analytics. Descriptive data analytics. me put my glass. So next one is descriptive spelling, that's right. Next one is DDA, that is a diagnostic data analytics. Next one is called PDA, predictive, first predictive then prescriptive. So predictive data analytics. Then comes next PDA, prescriptive data analytics. Next one is very, very important for auditors, okay? EDA. Exploratory data analytics. I want to explore. This is especially for auditors, very, very important. Okay? So my humble request, search about this particular word, exploratory data analytics. And then the next one is CDA, confirmatory data analytics. I want to confirm, is there any fraud or something like that. Okay? Then comes TA, text analytics. See, as a concurrent auditor, you are having an access to customer's email. Customer's emails, complaint emails or something regarding something like that. 1 lakh emails are there. How will you know about the customer segment? Will you go through 1 lakh mails? No, right? Today we are having text analytics possible, even in Power Query and Power Pivot. Really amazing, okay? Many times we are seeing, but today that concept of what I can say, master data manipulation may not be possible. Aadhaar card, everything is now linked. But previously you may be having what? Shanti, Shri Shanti, Shanti dot. Sometimes names are given with like that. Anyway. So, let me tell you at least some kind of analytics. Please see here. So, how will you identify, for example, what I can say, same family accounts? How will you identify? Same family. From the same family, how many accounts are there? Address. Same address. Okay. Customer ID, sir? Okay. PAN number, surname, yes, somehow we identify, yes. So, there are some kind of tests available in forensic audit also. Same test, same different test, like that it is available. So, if we are having the systems, I can just show you how to do it. Anyway, so where we can have one column is the same, another column is different. Okay. How will you identify and all? So, for example, I can say, as somebody was saying, same account. Okay. Have you ever seen relative size factor, friends? Another analytics. So, humble request. This one you try to see. Next time you will be thanking me. So, relative size factor. What is this relative size factor? Let me give you the simple example. First largest by second largest. First largest by second largest. Example, I tell you, one particular person was having 50,000 rupees, 60,000 rupees, 1 lakh loan, like that, don't know. Immediately your bank manager is giving 25 lakhs. Secured, everything is secured and all. How will you find such kind of loans? Previously, this customer has got only small level of loans, immediately he is getting a higher level of loans. How will you find? Out of lakhs of dollars. So that is easily can be found by first largest of this customer, second largest of this customer loan, 1 divided by 2. So if it is more than 10, there may be a fraud. Maybe a fraud. It's not that, as I told you already, there cannot be a formula to find what? Fraud. But these are some of the indicators that we can make use of it. And KYC norms you may be having, right? So in the KYC norms, why there is a KYC norm, friends? Know your customers. Know your customers. There we are asking some kind of crooked questions like this. Mother's eye color. Mother's, what is your mother's eye color? Something like that. You may be thinking, why these kind of questions are being asked? What is your favorite chocolate? What is your favorite ice cream? Or something like that they are asking. Now let me ask you this question. How will you do it in Excel? Suppose someone was giving all the 5 questions same answer. How will you verify? But this kind of ghost vendors are not available. Ghost vendor, ghost type is not available in maybe banks, very hard. But in companies, you will be having what? Ghost vendors like this. GH number, வெவ்வேறு number இருக்கும். But ஆனால் என்ன செய்வோம்? ஒரே addressல இருந்துக்கலாம், ஒரே வீட்ல இருந்துக்கலாம், like that. So this kind of things we have to see, because what I was saying is about same test. Okay, all these things are same. All the answers they are giving is the same. 10 customer ஒரே மாதிரி answer கொடுக்குறாங்க. எப்படி சார் சாத்தியம்? How is it possible? Mother cycle is also same. Favorite ice cream is also same. All the 5 questions they are answering the same. Out of 1 lakh records, how will you find? All these are exploratory data analytics. Okay? I want to explore the data. That is the concept of EDA. What is interesting in this data? That's what you will find. What is interesting? And what about DDA, friends? First one, descriptive data analytics. I want to talk about one particular point in that. See, what is this descriptive data analytics? You have learned in your first class of your statistics. But what is the purpose? I am taking the role of a tailor. See, I am measuring you and then noting down some numbers. I am sending you. I am giving the cloth to someone. Actually, he is cutting the cloth by seeing what? The numbers, measurement. The person who is cutting the cloth, he had not even seen you, but he is making an outline of you. Such a kind of description you should have. By seeing some numbers, without going through 1 lakh records, you have to show. That is the concept of what? Descriptive data analytics. I want to describe the data without even seeing that. Example, let me tell you, 6 numbers are making it. Just the 6 numbers. What are the numbers? Minimum, maximum, average, standard deviation, skewness, kurtosis. 6 numbers. I am not making that this, you have to calculate this. This is the formula and all. No. Very simple, friends, in Excel. Equal to current, equal to skew, equal to all these formulas are already available. So let me try to show it to you. For example, let us take the descriptive statistics of this particular system. Okay. So I am going to this. That's my glass.
Going to this.
Thank you. So please see here. Descriptive statistics, how easy it is. Let me show you. Okay. So if I go to this data, friends, this is the column number where we are having the various loans. Okay. Various loans are available in this column number 9. I am going to this column, go to data. If you are having Excel in your hands, how many of you are having this button? Data analysis. Are you having it? If you go to data analysis, friends, it is saying tools for financial and scientific data analysis. Tools for financial. Who are all financial guys? We are the financial guys. So if I am clicking this button, there are some tools. What are the tools? Starting from ANOVA until Z-test, we must know. And sir, starting from ANOVA until Z-test. Why we have to know this? Because all these are scientifically approaching anything. Scientific data analysis. So ANOVA stands for analysis of variance. Z-test is also available. Let me talk about the descriptive statistics. Are you having it, sir? Data analytics. How to get it otherwise? So every Excel is having since if a system is data analysis. If I am clicking this data analysis, system is giving me starting from ANOVA to various methods. I am going to the descriptive statistics. I want to describe the data. So descriptive statistics, and which column it is? Let me select the column number 9. This is the column number 9. Control, as of now I am pressing Control Shift down arrow, selecting the entire column, and I am saying labels are in the first row. I want a summary statistics. Once I press OK, friends, I am getting the descriptive statistics like this. Average, standard deviation, all these numbers are automatically calculated. I need not do anything. I want to describe the data. 6 numbers are so important, as I have told you. What is minimum, what is maximum, and what is the skewness, what is kurtosis, what is standard deviation and what is the average. 6 numbers are telling us stories. Let me try to copy it and paste it here. So, average, standard deviation, kurtosis, skewness, minimum and maximum. These numbers are telling us stories. So, anytime you try to find this, minimum is 0 in our case, maximum is only 4 lakh, and skewness, what does it mean, skewness and kurtosis? Skewness is which side the mountain is, left sided or right sided. Positive means left sided, negative means right sided, slightly positive, so you can see that slightly left sided. Kurtosis is minus 0.83, it is standing minus 3 to positive 3 is normal. I humbly request you to learn about these 6 numbers, that's enough. If you are learning 6 numbers without going through even a single record, I can describe the data. So that is the concept of descriptive statistics. Actually the range is 0 to 4 lakh, and this is my standard deviation, friends. 1,20,000 is my standard deviation. Average is 1,48,000. That means 1,48,000, this side to this side 1,20,000. So it is from 20,000 to 2,60,000 is the maximum records. More than 2,60,000 is slightly deviating, abnormal deviation. So like that we can easily find which is very much deviating here, which is the average for this, which is the normal for this business. So what is standard deviation, friends? Standard deviation from the average. If something is called standard deviation, more than that deviation can be called as what? Non-standard deviation or abnormal deviation or outliers. So I want to find out which is normal for this bank, which is abnormal for this bank. This bank manager, which particular loans he had given beyond his limits, beyond his capacity, which is average for this, like that we can see. Not only that, find that for jewel loans, find that for agricultural loans. Category wise you see, then you can see the beauty. So every time when you are starting exploring the data, that's what exploratory data analytics. Whenever you are going for what is interesting in this data, then you can get so many insights. That insights are helping you for data analytics. So you don't even know what is that, but you can easily unearth by using this kind of analytical tools. There you need experience, creativity, intuition, imagination also, and the tools are today available. Can you see that? Just click of a button, I have got all the 6 numbers. You go to just like sugar pressure, you are getting the report. You go to interpret only. So try to learn, unlearn, relearn. So after maybe, in my case I have taken, in the year 91 I was completing, 1993 I was completing BCom, 91 I was learning in the second year statistics, forgotten the statistics. Then I was learning about this descriptive statistics and all, again in 2012 or 2013. So think about it. After these many 20 years, I was again learning this concept of standard deviation, skewness, kurtosis. Then I was thinking, oh my God, how much of potentiality these 5 numbers, 6 numbers are having. So that is why it is. Okay? So all these kinds of analytics are very much useful, especially exploratory. For us, EDA is the very important thing. And with regard to AI, artificial intelligence, I want you to go to one website. Okay, so please go to that website and then search for what? The word that I am saying. I think in this system, I have to get my mobile phone to connect with the net. Kaggle.com. Have you seen Google.com? You might have seen Google.com, but Kaggle.com. Kaggle. Have you seen that? Let me try to connect it. So I am going to kg.com. So if I go to kg.com, you can see it is artificial intelligence and machine learning community, friends. If I search about credit card frauds, something like that. I am getting 811 results. So you can see all of them are EDA modeling like this. Exploratory data analytics only. Okay. So like this we have so many data sets. Suppose I am typing about Indian banking, Indian finance, bank frauds. One 129 results. So all these are having data sets. How to make the machine to learn about this modeling. So all these are machine learning community only, people are trying to use it. So people are developing the fraud identifying models using artificial intelligence. So we are having huge data in banks. It is not in the level of maybe branches. That's what I can say. In the branch level, whether it is possible or not, at least you must be knowing these things are happening, how they are identifying the fraud. Can I use the same kind of model in my branch also? That's what you can think about it, friends. Yes, okay. So let us make a small maybe a summation of what I have done. So we were talking about automation where we can use what? Power query and Excel properly, dynamic array concept, and then we were talking about what? Data analytics, and then some kind of what? Power automate also we were talking about. Hope we have done some kind of chatting and all. Any doubt, friends? Please ask. Any kind of question you want to ask?
What are the formulas you are having in capture?
Yes, yes, I will share, sir. I will share that file with you. And
Apart from that also.
apart from that, so I was creating one audit tool, audit template audit tool. I will try to share also with that. 100 functions I have created. All these 100 functions you can make use of it exclusively for audit. So it's creating it. Anyway, அதுக்கு தனியா ஒரு workshop போட்டு தான் நடத்தணும். So many kind of technological workshops should be coming forward. That's what it is. How many of you are feeling it is okay today's class? Somehow? Okay. Thank you. So boring? Anyone feeling boring? See, when he was asking, sir, do you want to present any PowerPoint? No, sir. I want to say extempore today. So I have not prepared not even a single slide or nothing. So from my experience of concurrent audit and then in our branch, in our firm, how we are using, that's how I was sharing my experience with you. Yes, friends. Any doubts? If you want to ask, you can ask. Otherwise, we will close. Shall we close that then? Thank you. Thank you, friends. Thank you for being with me.
Thank you very much. Good afternoon and welcome back to the last technical session of our today's one-day seminar. We have with us CA Raja sir. May now request Raja sir to come and occupy the dais. He will take us through underwriting and credit processing in new age banking. CA and Raja is a passionate chartered accountant turned financial educator, empowering individuals and organizations with the knowledge and skills to navigate the world of finance. 2 lakh plus students worldwide unlocked their financial potential through his online courses. 55,000 plus students thrive in his dedicated e-learning platform, CA Raja Classes. 1,38,000 plus YouTubers followers learn financial concepts from his engaging video lectures. And he is the author of 100 plus online courses and the creator of 8,000 plus video lecturers, demystifying financial complexities for all. Earlier, he worked as Assistant Vice President Credit for State Bank of India and analyzed 250 plus credit proposals, honed expertise in financial analysis, risk assessment and project finance. And he leveraged banking experience and specialized project finance plus debt syndication as a chartered accountant in practice. Banking and corporate training from 2019 onwards, developed and delivered corporate training and online courses on credit and financial analysis for major banks and thousands of finance professionals. He is a regular speaker and mentor for Young Entrepreneurs School Forum, regularly conducts financial literacy session for entrepreneurs. With this brief, I have a great pleasure in welcoming C.A. Raja sir to take us through underwriting and credit processing in new age banking. May now request Mrs. Diana from HDFC to come forward and present a shawl and memento on behalf of SARCFICA as a token of our love and affection.
Next 60 minutes, somehow you are trying to manage, but I'll try to keep it as engaging as possible. And before that, நான் தமிழில் பேசினா புரியாதவங்க யாராவது இருக்கீங்களா? சுத்தமாக தமிழே தெரியாது. Okay? Not in a single word. Okay. Fine. So I'll try to make it in English, but I rarely get opportunity to speak in Tamil because I settled in Kerala. And for this 1 hour session, I have come all the way 700 kilometers to talk about this, and it's okay. For you, I'll make it in English throughout, but last time when I came here, I got the permission and the entire session was in Tamil. I don't know whether Tamil sessions were conducted here, but entire session, I ensured it was in Tamil, and it was very movie kind of an experience for me because I use lot of movie-based connotations. Okay. Coming straight to the topic because I don't want you to wait more. Now the time is 4:05. Allotted time for me is 3:30. So we should have had the session from 3:30 to 5. I'll try to close by 5. If it gets extended for next 10 or 15 minutes, please bear with me. For that single reason, I have traveled 700 kilometers. Okay, right. So the topic allotted to me is credit processing and underwriting in new age banking, and I believe I have necessary qualification and experience to talk about this. Fortunately or unfortunately, when I got into chartered accountancy, even in articleship, for some or the other reason, all my audit exposures got confined to banking. Go for concurrent audit, go for internal audit, go for statutory audit, all for banks. Then the fate came like this, go and join bank. I went and joined in State Bank of India. I was taking care of this credit processing in a mid-corporate group, and that was an amazing experience for me. The 4 years, hardly 250 plus projects, but it is 5,000 plus crore size, and it gave me diverse experience. And because of that, I believe I am capable enough to talk here. And in this past 10 years, that is, I came out of State Bank 10 years back. In this past 10 years, I'm also training several bankers and finance professionals exclusively on this domain, credit and financial analysis. Nearly 40,000 plus bankers have taken my course on credit and financial analysis on their own interest, and nearly 5,000 people on compulsion they are forced to take because 3 banks have subscribed my course. For their thousands of executives, they have to undergo my training, no other go. They have to present their certificate that they have completed my course to HR for their annual appraisal. Okay, that's my background to talk about this topic. So credit processing and underwriting in new age banking. That new age banking, I'm keeping it to the end. Okay, we'll talk about that in the end, maybe the last 10 minutes. I wish to talk more about this credit processing and underwriting. And today, the context of this entire one-day session is like banking audit related, right? So all of you are very serious about banking audit, right? So when you go for bank audit, what are the things you have to look for? So the technology-based, audit-based, everything you are undergoing. But what is the core business of banking? What is the core business of a bank? The core business of a bank is lending, loans and advances. And how that core business decisions are taken? When a bank will take a decision, okay, let's give this loan, let's give this advance, when they will take this decision? Only after this process. Okay, so the core business of bank is giving loans and advances, and that decision is taken after this process called credit processing, or within that we have subset called underwriting. So when you do a bank audit, when you certify a bank's balance sheet, it is not enough that you just go through all the ledgers and certify, you also understand what had really undergone. Okay, of course we'll be going through ledgers, we'll be trying to find out all the mistakes, rectification, everything, but what is the ultimate core, what business this bank is doing, loans and advances, and how they have given that, what is the process they have followed, whether there are any issues in that process, because our focus will go more on the procedural aspects, right? But behind that there will be a big elephant hiding under the chair. Okay, so that is possible if you don't know what is this credit processing and underwriting. So let me try to give you a picture how this credit processing happens in a bank, and I will take a scenario of a bank which deals with a business loan. I'll take a scenario of a bank which deals with business loan. It means I'm not talking about the retail loan like home loan, personal loan and all. So how the process will typically happen? Banks will have somebody called as relationship managers, right? Relationship managers, generally they are the owners of the loan accounts. These relationship managers will scout for customers to whom the bank can give loan. So they'll go all networking, they'll do all networking, and they'll identify a customer, and they will explain these are all the loan products we have. So what are the typical loan products you can think of on the asset side? Let's keep it engaging. I know very elementary simple questions, but engaging to ensure you are also maintaining your control. Yeah. What are the typical asset products? Asset products.
Personal loan, auto loans.
Cash credit. Cash credit, overdraft. Something else.
Term loans.
Term loans. Something else. So cash.
Less. Loan
Okay. Yeah. Bill discounting, okay, all these are kind of fund-based products, right? They also give something known as non-fund-based, like they give letter of credit, bank guarantee, right? So these relationship managers will go and find business entities, they will establish relationship, and they will say our bank has got so much of loan products, we'll help you, we'll give you whatever you want, we will support you. Then they'll say you submit these many documents, we will put it forward to our credit team and will ensure we will get you whatever you want. This will be the promise made by all relationship managers, and most of the time it will not materialize. Okay. So what will happen? Those documents will be collected and it will be submitted to a team which will either sit inside the branch or it will be a separate hub sitting somewhere in a distant place. Okay. When I worked in State Bank, I started in a hub. So the hub was somewhere placed here in Chennai, near Egmore, and that is taking care of the business units loan requirements across Tamil Nadu. So even someone is asking for loan from Madurai, let's say high ticket loan, all the papers have to come to Chennai. Okay, that was the kind of setup they had. Then over a period of time, they realized that this island model is not working because there is a disconnect. There is a disconnect between the credit team and the customer, so the credit team should go and sit in the branch itself. Then that got implemented, and because of that I also went to one of the branch where I worked for 2 years. So there the interaction with the customers was very high. Okay, so what will happen? This relationship manager will say these are all the documents you have to submit to get the loan you want. So the credit processing starts with that step, that is collecting the loan application along with the documents and submitting it to the credit team. So when you are analyzing the balance sheet, when you are auditing the loans and advances, the first step is this: collecting the loan application from the borrower, potential borrower or the customer, and submitting it to the credit team. Then credit team will have face-to-face meeting. Okay, in retail loans we call it as PD. Personal discussion. In a bigger scale, there will be a big level or high level meeting which will involve the head of the branches, head of the credit team, relationship managers, and there will be face-to-face meetings and there will be Q&A sessions where the credit people will prepare a list of questions to understand what that particular borrower is doing. What is the business model of the borrower? What is the loan they are asking for? And if the bank gives this loan, how the borrower will repay? What is the borrower's repayment capacity? What is the financial standing? So many questions will be there, and all these are still at preliminary stage only. Okay? It means that particular loan proposal or the request is not yet taken for admission. So all this will happen at preliminary level, and if there is a preliminary kind of satisfaction, they will go ahead with login. They will go ahead with login in the sense that application will be keyed into the system maintained by the bank for CRM purpose. Okay, so there is a lead, and this lead is identified, and this lead is registered today. It means from then onwards, the turnaround time will start. TAT will start. Okay, so from here, the real analysis process starts. Okay, the credit processing starts from here. So what do I mean by credit processing? It is the process followed by the bank to understand and analyze the customer so that bank can take a decision whether to give the loan or not to give the loan, whether to sanction or reject. Okay, it looks like a simple process, I agree. But the process per se used to take 15 to 20 days time. Because when I also joined, I felt okay, it is a simple process, but it all started with when we go stage by stage. The first stage is the face-to-face meeting, and we'll frame an opinion about the promoters. By having discussion with the promoter, we will try to understand what is their level of experience, expertise in the industry, what is their vision, what they are planning for the company in the future, near future, distant future, what is the succession plan in place, what are the ideas they have, what are the steps they are going to take. All those will crop up, or all those will come to light in that initial discussion, and the proposal will be taken up for processing. So it's at this point the bank will get into deeper credit processing, where they get into something known as credit analysis and followed by financial analysis. These two are not new for us. By design, by curriculum design, knowingly or unknowingly, we have studied all this, right? Our financial management, maybe at CA Inter, financial management, that entire paper has become my day-to-day life when I was working in State Bank of India. And that was the only subject I feared at most when I studied, and that was the only subject I passed because of the grace of God, where I got 40 marks. 40 marks and cleared it, but God said, no, you haven't studied properly, go and work. Then for 4 years, every day I have to play with ratios, cash flows, fund flows, working capital, investment decision, exactly copy paste of our syllabus except for time value of money. Okay, so the critical step starts here. They start performing this credit and financial analysis. When I say credit analysis, they will try to understand the credibility of the borrower, how they will measure or assess the credibility of the borrower. That is, they will try to look back into the credit history of the borrower. In the past, how many loans they have taken, how they have serviced those loans, whether there were delays, whether there were delays beyond the due dates, we call it as DPD, okay? Whether there were any NPAs, non-performing asset. NPA is a red flag. If the borrower, if a new borrower who is coming to a bank has a past history of NPA in the credit record, then that banker will run away. Why? Because in the past they have proven to the outside world that they will take loan, they will not repay. And as a new banker, why I should marry you? So that will be the question. So if there is an NPA, credibility is lost. If there is a continuous DPDs, that is days past due, that is they are not making the payments on time, it means they are putting the loan account at the risk of becoming stressed asset. And stressed asset over a period of time can migrate or upgrade to non-performing asset. Okay, so that will be evaluated. So in credit analysis, the first step will be looking back and understanding the credit history, where the focus is understanding how the past loans have been serviced or honored by this particular borrower. Number two, they'll move into financial analysis. And this is something, this will be our favorite area, because we are the providers, we are the input providers for financial analysis. Why I am saying? Because we stop our services after signing the balance sheet, right? As an accountant, as a chartered accountant, as an auditor, our role almost comes to an end when we sign the balance sheet. But for bankers, the work starts only with that. Your finished goods is their raw material. They take your balance sheet, signed balance sheet, and they will start analyzing threadbare. Analysis means even as an accountant will not do that kind of extensive analysis, okay? They'll try to analyze the borrower based on the balance sheet what you have signed from all angles, In that they will pay more attention to three critical areas. If you want, you can just make note of it, because it will help you not only from the audit angle, but also from financial consultancy angle. If you are representing your client as a consultant in front of a banker in financial institution, these are all the areas where you have to be really, you should have real control over, and that's what bankers will also be looking at, okay? So number one, from the audited financials submitted, the first thing what they will look at is profitability, okay? So if you go and give the balance sheet to any banker, what they'll do now? First they'll open the balance sheet, income statement, they'll see what is the profit. Profit compared with sales. Profit standalone will not communicate anything. Most of the information, financial information standalone will not give you any information, any meaning, unless and until you compare it with something else and derive a ratio out of it. So first they'll look for profitability. Basically, profit after tax divided by net sales. Because each bank will have some parameter linked to this. For some banks, profit after tax by net sales, they call it as profit margin. For some banks, 5% is good. For some banks who are very conservative, they'll say 10% is the best. Some banks, even 2%, they'll start accepting it as profit making unit. And there are certain banks which will say below 2% means you are not making any profit, will treat your profit making capacity as zero, okay? So in credit and financial analysis, the first step is they will look for your profitability, and in this profitability, their focus will be how this profitability is moving when compared with the previous year. In the current year, whether the profitability has increased or decreased. If it is increased, good, but whether that increase is because of any extraordinary item or is it because of any other income coming into play, then they are not going to accept it, okay? They'll see whether the increase in profit after tax is only because of operating income increase, not because of non-operating income. They factor all this. If there is going to be one-time sudden increase in other income just to maintain the profitability, they'll treat as if there is no profit. Okay? So, profitability will be the number one, and they'll see how this profitability is changing over the period when compared with the previous year, whether it has increased or decreased, and they will also try to understand what is the average of the 3 years and what is the present year position. So they will do this comparison also. So past 3 years profitability average will be compared with the latest year profitability average, and if it is in positive direction, no questions asked. If it is in negative, then they'll be interested in knowing what is going wrong with this company. Okay? Number one, profitability. Number two, they are more concerned about long-term stability of the business. They are more concerned about the long-term stability. If they are looking at two pillars as pillars of strength for any business, that is one, profitability, the other one is long-term stability. Long-term stability is nothing but our debt equity formula, right? But when I say debt, you have to look at all the liabilities, not just confined to long-term debt. Okay? When I say debt equity, it is all the liabilities. You can say total outside liabilities. Debt is equal to total outside liabilities. What is the formula for debt equity? Debt divided by equity. So we'll rewrite the formula as total outside liabilities divided by equity. Instead of equity, they'll use some other term. Any idea? They'll not merely say debt equity, because they know equity may not be there all the time. Net owned funds, more from the NBFC's angle. Yes, and they refine it further also, because they know what is standing in balance sheet as equity. Let's say capital plus reserves and surplus may not be there in that business for some reason. It's because in balance sheet, on one side you may have equity, reserves and surplus, total outside liabilities, and for that you are having the matching assets of long-term assets and short-term assets, right? It is possible some of the assets or some of the money brought into the company would have gone outside through some route. Yes or no? The money which has come in the form of equity, the money which got retained in the form of reserves and surplus, the money which has come in the form of long-term funds, short-term funds should have been created as assets, and those assets should remain within the system. Only then we can say that equity is there. But if that money has gone out through some loophole, let's say in the form of loans and advances to sister concerns, let's say investment in subsidiaries, investment in associates, or let's say creating so much of goodwill based assets, intangible assets, do you think those kind of assets will come for rescue of this company in the event this company makes a default in the loan? Are you getting me? I'm trying to put a picture. This company has raised money, equity. This company has retained profits, reserves and surplus. This company has raised long-term loans. This company has raised short-term funds. This is your balance sheet, one side. On the other side, you should have matching assets, right? The matching assets can be your current assets. Matching assets can be fixed assets, in that you have tangible, intangible, right? Let's say this company defaults. Now the bank, which has got right on all the assets, they try to come and enforce the assets. They have right on all the assets. They come and enforce the assets. They are enforcing current assets. Okay, sell the stock, get the money. Call the receivables, get the money. Now they are trying to enforce the long-term assets. Fixed assets, sell, get it. Then there is one asset called loans and advances. It's two sister concerns. And when you go to that sister concern balance sheet, then from there it has gone to brother concern. From there it has gone to relative concern. So it means money has gone out, and they recognize this. They don't want this shock to come to them at a later point of time. So what they will do, even though there is equity, if some money has gone out in this form, they are not going to accept it. Similarly, let's say that balance sheet has substantial goodwill as an asset. Okay, substantial goodwill as an asset. And the company which has got so much of goodwill in its asset base has defaulted. Now what this bank can do? Go to balance sheet, copy paste goodwill and try to sell it in the market. Will anyone buy? No. It means goodwill as an asset in the balance sheet will not fetch any value in the event of default. So what the bankers will do? Let your equity be there, but I am little conservative. I am not going to consider all this nonsense. For me, goodwill is not an asset. Okay. For me, the loans and advances given is gone outside this company. You have looted the money. You give whatever name you want. For me, it's the money which has gone out of the system. And you have invested something in subsidiary, it will never come back. Because if you are investing in subsidiary means, what is your intention? Your intention is not to sell it in current year, right? Your intention is to have that subsidiary grow along with you or kill it. It means that money is also not going to come back. So they are not going to look at equity as we generally look at. Because for us, equity means capital plus reserves and surplus. Maybe we may go one step further and say revaluation reserve is not a reserve, so we will deduct it. Okay, so that's how we do. Equity means capital plus reserves and surplus minus revaluation reserve. If you do it, you get what is known as net worth. Okay, but in this net worth, something is not tangible. What? Intangible assets. There are certain intangible assets which will not come for rescue. For that matter, you even take softwares. This company has spent crores and crores of rupees in developing a software which is customized for them. And in the event of default, bank cannot do anything with it. So they will not consider that also. So generally what they will do, intangible assets means knock it off from the equity. Intangible assets means knock it off from the equity. But I also mentioned about investments in sister concerns, right? Investment in loans and advances. So there may be a valid counter argument saying that, hey, don't treat everything at par, okay, everything equally. We have done it for genuine purpose. It is for genuine trade transactions. Why you are always looking at us in suspicious angle? Okay, banking system recognizes that. So what they will do, they will calculate a debt equity ratio called TOL by TNW at first stage. Then they will go ahead and calculate something known as TOL by adjusted TNW. Okay, first I'll give you the formula, first one. TOL by TNW is nothing but total outside liabilities. TOL by TNW is equal to total outside liabilities divided by tangible net worth. Divided by tangible net worth. So total outside liability I need not explain. It is all the liability, current liability, long-term liability, whatever is payable to outsider, it is total outside liability. Then what is this tangible net worth? Which is your equity adjusted for intangible assets, adjusted for revaluation reserve also. So you can write tangible net worth is equal to capital plus reserves and surplus. So when I say plus reserves and surplus, this may include revaluation reserve also. Yes or no? So minus revaluation reserve minus intangible assets. Minus intangible assets. Okay, so if you calculate a ratio like this, it will communicate what is the exact leverage position of a business entity, the financial leverage. Let me give you a number so that it will make more sense. Let's say total outside liability is 300 crore, just right. Total outside liability is equal to 300. Tangible net worth is equal to 100. Tangible net worth is equal to, that is TNW. Tangible net worth is equal to 100. Now if I ask you to calculate the debt equity ratio or TOL by TNW, what will be the answer? 3:1. That is, we'll get the answer as 300 by 100, which is 3. And while writing it as a ratio, we'll write it as 3:1. And what does that communicate? 3:1 means what? For every 1 rupee contributed by the owners, this business has borrowed 3 rupees. Okay. So if I express it in fractions, 3 out of 4 is borrowed fund, 1 out of 4 is own funds. Yes or no? Because we got the ratio is 3:1, it means 3 out of 4 is borrowed fund and 1 out of 4 is owner's fund. And if I reduce it to percentage further, what is 3 out of 4? 75%. 1 out of 4, 25%. So on look, I can say, oh, this company 75% it is running the show only with outsiders money. Okay? Only with outsiders money, and 25% owners have brought in. Okay, fair enough, because when you really go deeper into the industry, finding this 25% itself will become very surprising. Oh, you are having 25%, I am having only 10%. That will be the general talk. Okay. Now, let's say the same business, which has got the ratio of 3:1, is giving you one additional piece of information. While going through the balance sheet, you identify that this company has diverted substantial money to sister concerns, and it is understood from the discussions, inquiries, market references that sister company is not doing well, and that money is not likely to come back. Are you with me? We have discussed 300, 100. We got the ratio 3:1. It means 75%, 25%, okay. But a further discussion reveals that they have made a substantial investment, not investment, they have diverted. They have diverted substantial funds to their sister concern, and from the market we got the information that sister concern is not doing well, so all possibilities this money will not come back, and that amount is now 75 crore. Okay, that amount is now 75 crore. So now at this point, what is our belief? This company is having a equity of 100 crore, yes or no? At this point we are believing this company is having an equity of 100 crore, and we are okay with their debt equity ratio of 3:1. It means okay, they have contributed at least 25%. But now we got one critical information, 75 crore gone out of the system. But I can't do anything because already I have calculated this tangible net worth. Tangible net worth means it's a very conservative formula. What is the formula we took? Capital, we added reserves and surplus, we deducted revaluation reserves, we deducted intangible assets. All conservative injections are given. What else I can do? But I got very critical information, I have to act on it. So what I'll do, I'll go and calculate something known as adjusted tangible net worth. Okay, what we had now is tangible net worth. Now let me go and calculate something known as adjusted tangible net worth. So what is adjusted tangible net worth? Write it. Adjusted tangible net worth is equal to tangible net worth minus investments in subsidiaries, associates, sister concerns. Investments in subsidiaries, associates, sister concerns. Okay, now you calculate. What is the adjusted tangible net worth here? Adjusted tangible net worth is equal to, what is the original T&W we had? 100. What is the investment made in associate concern? 75. So what is the adjusted tangible net worth? It is 25. Now let us calculate revised TOL by T&W. Okay? The revised TOL by T&W will be nothing but, in the numerator you will have TOL by T&W, TOL. In the denominator what you will have is adjusted T&W. Please calculate. Adjusted TOL by T&W is equal to 300 divided by 25. So what is the ratio? How much? 12. See, now you are getting the real face. 12. It means it is 12:1. So what is the understanding? This company has borrowed 12 out of 13. Okay, if you express that in percentage, 12 by 13. What is the percentage? 12 divided by 13, someone? 12 divided by 13. 92, 93, let's say 93. This company has borrowed 93% funds from outsiders, and owners' funds are only 7%. It means this business unit will be considered as very high financial risky unit. Okay, and that was not evident in the basic formula what we had. The basic formula is debt equity. Then we refined it as TOL by T&W. Then we made it more sharper. We made it as TOL by adjusted T&W. In many cases, when you go for audit, when you go through the proposals, especially the business units, just have a look at the single ratio. Just have a look at the single ratio TOL by adjusted T&W. If it is somewhere above 4:1, it means be very cautious in that particular unit, because they have diverted all their substantial funds in some other units. It means now the question is how they are managing their ship. They'll have liquidity stress, they'll have financial issues, they may not even be making profits, or they'll be managing, or there may even be a fundamental question whether their financials are true or not. Whether their financials are true or not, whether window dressing is happening. All this will come to light if you look at that one particular ratio. Okay, so that's about the second ratio. The first ratio what we talked about is profitability, where I put my focus on profit after tax. I compared it with the sales. The second ratio is the leverage position, where we are basically doing debt equity analysis, but we gone deeper into TOL by T&W, that's what predominantly bankers will do, but whenever they sense that something is not right, they go for this. They go for the refined one. And this ratio will help them to reject the loan. TOL by T&W, because the same case what we did now, what is the TOL by T&W? 3:1. It means 75% loan, 25% owner's money. But when we refined it, when we gone deeper, we got a clearer picture, and that will help the bank to take a decision, okay, let us not give the loan. And as an auditor, when you go through business loan, because you will be going loan files, right, especially the high ticket loans, and you will get an opportunity to go through the appraisal memorandum which they have prepared. You will get an opportunity to go through the financials, the ratios, and all this will give you cues, all this will give you indicators that go deeper into these accounts. Okay, this is number 2. And number 3, what they mainly look for is liquidity. And liquidity is something for us, it is 2-mark question. That is, what is current ratio? Write the formula. It's a 2-mark question, and current ratio formula all of us know. It is current asset divided by current liability. That's it. But as an auditor, when you go through the file, and when you look at the current ratio below 1, put a brick. When you look at the current ratio below 1, put a brick. Why? Any idea what? See, basically what this current ratio communicates? It's a ratio to measure liquidity, right? So what it communicates? Whether that borrower is having liquidity in his financial position or not. And what do I mean by liquidity? Means ability to meet short-term expenses, short-term obligations without any difficulty. That's all, liquidity. Then why we should be very much concerned about the current ratio below 1? What does current ratio of 1 means? Current asset by current liability. What does that mean? Current asset is equal to current liability. But now visualize the balance sheet. Current liability, current asset. Current asset is exactly equal to current liability. It means current liabilities are those liabilities which you have to settle within a period of 1 year. And for settling that obligation, you have resources in the form of current assets. It means those assets can be converted into cash within a period of 1 year. So you can convert them into cash within a period of 1 year, and you can settle these liabilities. Situation looks okay, but it is not okay. Current ratio of 1:1 is more dangerous. Okay. Then what is current ratio above 1? Let's say the current ratio of 2, because even today also we had this discussion, right? Current ratio of 2:1 is theoretically ideal ratio. That's how we were trained. But in practice, when you go and see, finding 2:1 current ratio will be very difficult. It's not that easy to find units having current ratio of 2:1. What does the 2:1 current ratio mean? Visualize the balance sheet. You have liability, current liability this side. You have current asset this side. It means current assets are more, liabilities are less. So what does that communicate? You have resources greater than obligations. Within 1 year you have to pay so much, but for paying that you have resources which is twice of the obligation, right? That's what means. Then what does current ratio below 1 means? Current ratio below 1 means what? You have more current liabilities, and to settle the current liability you have less current assets. Okay, so what is the impact? The impact is you have lesser resources for fulfilling more obligations, and it means what? This business is facing liquidity trouble. They are facing liquidity issues because they have more of liabilities which have to be settled within a period of 1 year, and when they look back, they have resources, lesser resources to settle them. It means obviously some portion they'll face issue, right? Let's say they have to settle 100 crore within 1 year, and they have current assets only 75 crore. They are going to be in trouble. They are going to be in soup for remaining 25 crore, and that will come to your attention without even you going through all their account statements, everything, right? You need not even go through the bank statement to understand whether this unit is facing liquidity issue. You can just have a look at their balance sheet. You can take the current asset figure, you can take current liability figure, see what is the ratio. If current ratio is above 1, okay, there is a prima facie acceptance level. But if current ratio is below 1, then there is a signalman telling you that there is a problem. Okay, there is a problem, go deeper into this accounts. Is it clear? Okay, so current ratio above 1, fine. Current ratio equal to 1, it will look like a matching perfect scenario. It will not work in that way, because we believe that current assets can be converted into cash and made available for settling the liability. But what is the composition of current assets? Inventory, receivables, cash and bank balances. And inventory, if substantially they are in the form of a raw material, do you think you will be able to convert it into cash whenever you want? No, it has to undergo a process. Or even let it be in the form of finished goods. Do you think you can convert it into cash immediately? No, if the customers are going to be credit seeking customer, credit demanding customer, then you cannot do that. Okay. So these three fundamental ratios will be analyzed, and of course along with that they will be looking at various other ratios. Your study material, ICAI study material on financial management, you can very well go through. There will be umpteen number of ratios, and take it from me, all ratios are tested and all ratios will be evaluated. For each and every ratio, they have to give a reason why it is high, why it is low, why it is worse than the previous year, why it is better. I mean, the only case where the explanation is not required is when it is better than the previous year. If there is a dip in the ratio when compared with the previous year, if there is a dip in the ratio when compared with the averages, explanations have to be provided. Okay, so that's how the financial analysis first stage will get over. But it is not just that. Then they will be doing a balance sheet snapshot analysis. Okay, balance sheet snapshot analysis in the sense, the balance sheet whatever we sign and give, they do line by line comparison for each and every item. So if there is a movement in equity when compared with the previous year, if there is an increase, or for some reason, let's say because of buyback or something, there is a decrease, that movement have to be explained. If there is a movement in term liabilities, if there is a movement in current liability, assets, all the movements, if they are positive, reasonable, no deeper explanation, but if they are negative, detailed explanations, they will give, and that will help you to understand as an auditor. Because instead of going through the entire set of their accounts, just by going through this, you will be able to identify, or you will be able to categorize the borrower accounts as high risk accounts where you have to put more focus, low risk accounts, yes, lesser focus is enough. Okay. Then it is not yet over, because we are talking about financial analysis which they are doing, in which I just touched on the three ratios, then the snapshot analysis of balance sheet. Then they'll go for two super tools which we are very comfortable with. One is cash flow statement, the other one is fund flow statement. I'm not sure how many of you are really thorough with fund flow statement. Cash flow statement, yes, all of us, because since it has become the part of the financial statements itself, we know. But do you know how they look at the cash flow statement? For them, cash flow statements is like a waterfall. For us, for accountants, cash flow statement is a complex statement because we have to do all bottom-up approach, right? We have to take profit after tax, then we have to add back, we have to do plus, minus, changes in working capital, all those we do. Then eventually we will arrive at cash flow from operating activity before working capital changes, after working capital changes. For us, it is so much of technical nuances, technical steps. But for them, it is that one single line figure. What is the cash flow from operations? Okay? We are doing all this exercise, it's only for them, only for the stakeholders to read. And they exactly take that. They look at cash flow from operations, they look at cash flow from operating activity, investing activity, what is the other one? Financing activity. So how they look at it? Whether this entity is generating positive cash from operations or negative cash from operations. Okay, so when you this is not only from bank audit angle, even otherwise, and I believe all of us know that, but let us also step into the shoes of the stakeholders who are going to read this statement. Okay, so they are going to look at cash flow statement to understand the flow of cash, from where the money had come and how that money got used. If a cash flow statement is presented before me, I will look at cash flow from operating activity, I will look at cash flow from investment activity and financing activity. In between numbers does not make any sense for me, and the same is the case with the bank's top sanctioning authorities. Let's say the people who are at the top level, at the board level, when they are sanctioning crores of crores, say like 1,000 crore proposals and all, they will not go into these kind of nitty-gritties. They look at the numbers which comes under those three headings. Cash flow from operating activity, is it positive or negative? Positive, yes, the company is managing the show on its own. Negative means a question. Despite so much of investments, despite so much of efforts, despite so many people, can't they generate positive cash? That will be the question. Can't they generate positive cash? Why we should risk ourselves by lending to these kind of people who are not even capable of generating positive cash from operations? Okay, so that is the message that goes to the stakeholders who are reading the cash flow statement. Okay, that is number one. Number two, they look at cash flow from investment activity, and when they see the inflow and outflow, two things will arise. When they see the cash flow from investment activity as a negative figure, what it communicates? This company is making investments. They are spending money on investments. So, is it for increasing the revenue of this business in the future? Okay, are they investing for creating assets which will generate revenue in the future, or are they investing money in such a way like it is going out in the name of loans and advances to sister concerns? That will be the concern. Next, if they see positive cash from investing activity, if they see positive cash, what is the negative cash? It means money is going out for acquiring various assets. But if they see negative cash, sorry, I changed it. If they see negative cash, it means money is going out for acquiring assets. If they see positive cash, sometimes it will excite them, sometimes it will concern them as well. Okay? When it will excite them, when it will concern them, any can you think of? In cash flow statement, that summary figure says cash flow from investment activity is a positive figure. Okay? When it can excite them? Sale of? When there are sale of investments, but again a question will arise. If they sell all their investments, is it a going concern or not? So that will be the immediate question. Okay? Whether this unit is going to continue for the foreseeable future, or they are planning to shut down. What kind of assets they have sold? Will it have any impact on the production? Will it have any impact on the sales or profits? That will be the question. So it will concern them if critical assets are being sold, but it will excite them if this company is disposing of non-performing assets. Let's say in the balance sheet it is carrying huge assets which are not generating any revenue, and that is becoming a barrier for this company to make more profit, and one fine day they found a buyer and they disposed of that investment. Then it will excite them because that cash is going to come back to this entity and it will rejuvenate the entire operations. Okay, so one simple line figure will communicate a lot. So cash flow from operating activity, I've said, cash flow from investment activity. Then comes cash flow from financing activity. They look at cash flow from financing activity. Is it positive figure or negative figure? What does positive means? Money coming in. And what does negative means? Money going out. Okay. Money coming in means, again, it can excite them or it can make them to look little concerned. When it will excite them if money is coming from owners. Okay. If equity is coming in, what will happen to the debt equity ratio? It will improve. When the debt equity ratio improves, what will happen? The long-term stability of the business will improve. And when owners are contributing more, it means it shows that owners have more confidence in the business. When owners are more confident, when they are pumping in more money, then bankers will also be ready to pump in more money, because owner is confident, he is bringing in money, so let me also take share. Okay. But if it is going down, still they will be happy. Okay. If cash flow from financing activity is negative, it means they are paying money. They can be happy, they can be concerned also. They can be happy on one angle that yes, their financial obligations are getting reduced. They are making payments. But if it is huge interest money only they are paying, okay, it means there is no principal repayments happening. The majority of the financial cash outflows are only interest. It means what? They are sitting in the financial risk table. They have so much of heavy bad debts, and because of that they are paying all their earnings in the form of interest, and that's why there is a cash outflow, significant cash outflow in the form of financing activity. So just by looking at the cash flow statement, not even going into the details, just by looking at these three numbers, let's say for example I'll give an illustrative numbers. The cash flow from operating activity is 100 crore positive. Cash flow from investment activity is 60 crore negative. Cash flow from financing activity is 30 crore negative. So if these three are the information available, and if it is presented to a banker for decision making, he will say, hey, good company. Because from operations they generated 100 crore, okay, and they wanted to make some investments. Out of this 100 crore, 60 crore they made some investment, good. And they had so much of money, they had 40 crore left. And out of that 40, they also paid 30 crore financing activity. They are left with 10 crore. They are doing good business. Okay, they know how to manage things. But on the other side, if I interchange the numbers, let's say cash flow from operating activity is negative, cash flow from investment activity is negative, cash flow from financing activity is negative, then when this will turn positive, people will be worried. Okay, but of course, for new businesses, maybe in their initial years, for 1 or 2 years, everything will be negative. Maybe the financing activity will be positive, the other two activities will be negative. So it's all situation based, it's all period based. We cannot have one situation applicable to all kind of an analysis, no. But case to case varies. So under financial analysis, they will do this detailed cash flow analysis, and this is what we are trained to prepare. We are trained to prepare. Maybe in financial management, I have seen some more. I used to teach FM students in Ernakulam some 5 years back. So at the time, very rarely I have seen some problems where cash flow analysis is done. Our focus is always on preparation of cash flow statement, but analysis of cash flow statement is what the other stakeholders are looking for. Okay, I'm not finding any fault here because each and every one of us has a different role to play. As an accountant, we are responsible for preparing the cash flow statement. The stakeholders are concerned about reading those cash flow statement. We should also develop that ability. Okay, so far we started by 4:05. Now the time is 4:55. Till now, are you finding the session useful? Yes? Yes? Thank you. I'll talk about one more tool, then I'll jump into this. So we talked about ratios. I just mentioned about cash flows. And there is one more tool. Fortunately or unfortunately, it was given very low weightage, but such a powerful tool, and that is the one tool which made me to lose my sleep as well many days when I was working in bank. And the name of the tool is fund flow analysis. Maybe whoever had studied CA some 10 years back or till 5 years back would have studied this particular tool in a separate chapter called fund flow statement. This single tool we are following in some other format. We don't actually prepare now, but auditors, even while auditing, while attesting the financial statements, we are making use of this single tool in an indirect form under Caro reporting. In Caro, at one point, you will say short-term funds are not diverted for long-term purpose. Yes or no? In Caro, you will say the long-term funds raised is used only for long-term purpose. Short-term funds are not diverted for long-term purpose. Let me tell you, what is the purpose of this fund flow statement? This fund flow statement will compare two balance sheets and will take one P&L, the latest P&L, and two balance sheets, current year and previous year, as a base, like a cash flow statement. And we will prepare sources of funds, uses of funds. Okay? Simple. I'm not going to teach you how it is done and all, but this statement will capture the sources of funds, from where and all this business has got money, and where and all this business has used this money. But what is the beauty of this statement is, this will capture all the long-term sources and it will compare that with the long-term uses. So you may ask, that's what balance sheet is also doing. But balance sheet is giving us a position as on a particular date. We want to know what is the movement. So that's why we compare the current year and the previous year. So Now, if you look at the fund flow statement, it will show in this 1 year how much long-term funds they have mobilized. Okay, and it will show how much they have used it for long-term purpose. Let's say, for example, they have mobilized long-term funds of 100 crore. Okay, they have used long-term purpose 150 crore. How much they have mobilized? 100 crore. How much they have used for long-term purpose? 150 crore. So now you should ask me a question, how is that possible? Long-term funds, what they raised is 100 crore. But how come for long-term use they can have 150 crore in place? That's what this tool will reveal. This tool will show long-term sources 100 crore, long-term uses 150 crore. It means there is a deficit of 50 crore. Yes or no? Source is 100, use is 150, there is a deficit of 50. So now the question will arise, from where this deficit was funded? From where this deficit was funded? Now try to visualize a balance sheet. Balance sheet you have long-term source. Long-term source means you can say equity, reserves and surplus, long-term loans. Okay? You have long-term sources on one side. On the other side you have long-term uses. And try to visualize this. Long-term source, long-term use. Long-term use is greater than the long-term source. So it means there is a deficit, yes or no? There is a deficit. So who would have contributed for this deficit? In balance sheet, if you have long-term source, long-term use, what are the remainders? Short-term source and short-term use. Okay. So I have raised short-term source. I have used partially for short-term uses. I had something extra. And that extra, what I did? I went and used for long-term purpose. Okay, what is the problem in this? That's where the real problem starts. Okay, if we want to put this in a very cinematic way, we can say this is the beginning of the end. This is the beginning of the end. Why? Because they raised short-term funds. They are supposed to use short-term funds for short-term purpose, but partially only they have used for short-term purpose. So there is a surplus they have. What they did? They used the surplus for long-term purpose, and whoever have given money for short-term purpose will come and knock at your door when their time reaches. So it may be 30 days, 45 days, 90 days, let's say max 1 year. And when they demand for the payment, and if you are not in a position to make the payment, what they will do? They will issue legal notice. And if it is proved that you are not making payment, then the court of law, will it be in their favor or your favor? In their favor. They will be merciless. They will be merciless. They will say, are you going to make payment or not? Sir, sorry sir, I don't have money. Okay, don't worry, I will close your company. Okay? Company will go into liquidation. The company will be forced to sell the long-term assets where they diverted the money. It will be forced. And these are all not theoretical stories. This is what you will see in reality, especially people who are dealing with insolvency. Okay, they'll know. This will be the story of many of the companies. Actually, 95% of the businesses are collapsing only because of the single mistake. They don't collapse, they don't fail because of marketing or sales or quality or technology or HR or labor or nothing. 95%. 95% of the businesses, they fail only because of the single mistake called financial mismanagement, and in that root causes diversion of short-term funds for long-term purpose. Okay, so one tool which will reveal that very clearly is fund flow statement. Fund flow statement will show long-term sources 100 crore, long-term use is 150 crore, there is a deficit of 50 crore, and this deficit was managed by short-term funds. Look how irony is, long-term purpose is funded by short-term source. And that's why I said it is the beginning of the end. And you know there is one more tool which will give this information in one single snapshot. Current ratio. When the current ratio is below 1, when the current ratio is below 1, what does that mean? When the current ratio is below 1, what does that mean? Your current liabilities are greater than current assets. So what happened to that greater than portion? You raised current liability 100 crore, you used only 75 crore for current asset, that remaining 25 crore went. It went for long-term purpose. Okay, current ratio below 1, fund flow tool. these two will reveal there is a diversion of fund, and it means that unit has problems you have to focus on. Okay, so I talked about 3 critical ratios. I mentioned about the cash flow, how you have to look at it. I tried giving you the perspective of the lender financial institution, and I also stressed on the important tool called fund flow analysis. Fund flow analysis, if for some or the other reason you didn't have the opportunity to learn at this pace, in my YouTube channel itself, in CA Raja classes, you will find some detailed sessions where you will find at least 7 to 8 videos I have published on fund flow. Just go through that, it will be worth your time, and it will help you to guide your customers as well, clients. Not just from banking angle, if you have the traditional clients where you are the auditor, apart from audit attestation, just prepare this fund flow statement and tell them, hey, look, what are you doing? You are raising long-term funds, you are using it for long-term purpose, good, but there is a shortage, and why you are bringing short-term funds to fund this? Are you digging your own grave? This is what will happen, because I have seen literally with my own eyes people digging their own grave and getting into this. Okay, so you can educate them, and in some or the other way you are taking care of this through Caro, but we can take it more seriously through fund flow analysis, because that will throw the numbers. That will throw numbers exactly what went wrong. And in State Bank, when I worked, the only statement I worried is this, because this statement will show threadbare how indisciplined this particular borrower when it comes to financial management. And when such kind of proposal goes to the committee, there will be decision maker, the chairman of the committee. First he'll go to that page, fund flow page. Only 3 lines will be there. Long-term sources, long-term uses, surplus or deficit. He will see surplus, okay. Then we'll see next, then we'll discuss. Negative, get out. He'll throw the proposal, okay? Because that is the kind of impact, or that could be the kind of devastation this fund flow can communicate. So that's about those critical tools. So I touched on financial analysis tools, predominantly followed. Can I take your next 10 minutes? We'll close by 5:50. Okay? We started by 4:05. Now the time is 5:05. I should ask till 5:30, but I don't want to be so merciless. I'll try to close by 5:50. I didn't prepare any PPT presentation. I just have a mind map, and that helped me to collect all the points. So I'll try to put them here. So I wanted to cover what is credit analysis, credit processing, underwriting that is done. Is it visible? Okay, now the topic for me is, I should also talk about the changing landscape, because new age banking. Yes, there are changes happening in credit processing and underwriting also, and most of the changes are significant. They can be seen in retail lending segment. Okay, corporate level or high ticket cases, those kind of adaptations or embracing AI, machine learning, everything will take time, but they are gradually happening. The pioneers are HDFC, ICICI, SBI, they have all gone into that. But predominantly the impact is seen on the retail segment. SME and corporate, things are on development phases. So I can say there is a shift happening. Banks started using advanced analytics. Traditional assessments, as I said, it goes through a long story like starting from paper collection, face-to-face meeting, then discussions, then balance sheet analysis, credit analysis, cash flow, fund flow, it goes deeper and deeper. But in retail, nowadays, sanction happens instantly based on your banking relationship. You will have pre-approved loans. Even at the time of account opening itself, you will become pre-qualified, then you will have pre-approved loans, and all the data, whatever they want, they get it from your bank statements. And saying the past 1 year, there is a significant development happening towards MSMEs also. I'll just touch on that. So, instead of going for the traditional approach or combining with traditional information, banks have started going for this broader approach. And this broader approach in the sense they are going to use multiple data from various points using AI and machine learning, and that is actually helping them to understand the borrower's financial health risk profile, and this is helping them in quick decision making. And how many of you are aware of this account aggregator? Account aggregator is, see, earlier for this underwriting, what will happen is borrower have to submit the documents, then the banker's credit officer or credit analyst, they have to manually go through all the documents and they have to take responsibility for each and every document submitted. They have to validate. And in between, there is no other person to cross-verify the genuineness of all those documents. And then came this concept called account aggregator, which will go much deeper in the coming days. So this account aggregator is basically a third party who will collect the financial information from the financial information user to the financial information provider. So bank can be the financial information user, and financial information provider can be some other bank, it can be some other insurance agency, or it can be even government, GST, whatever. So there is going to be an aggregator in between who is going to verify the documents that are submitted, let it be the GST, let it be the financial statements, let it be bank statements, and this is a development which will come off late, and it will go deeper in the coming days because of all the AI and ML coming in. And this is something happening in a big scale in MSME space. Okay, have you heard about CMR? CRISIL MSME rating. Okay, CRISIL MSME rating is the rating given by CRISIL for MSME business units. They give a rating based on the credit history of that particular MSME unit. Credit history. That is how they have honored their loans in the past, whether there were any delays, whether there were any delinquencies, whether there are NPS. Based on the credit history, they have given they have given rating, and that rating was considered by bankers for pricing decisions and even loan sanction decisions. Okay, but not the defect, it just focused on one area. It just focused on credit history, past credit history. So industry wanted something more deeper in the sense they want to know if we give loan to a particular customer, whether they will default or not. Credit history is about the past, right? Credit history is about the past. If we give loan to a particular customer, will he default in next 12 months or not? How is that possible? Bank cannot do it. So that's where, through clerical process, through manual process, they cannot do it. That's where they started deploying, we say, the new age banking using artificial intelligence and machine learning, and that's where Civil TransUnion came out with this something known as FIT ranking. Ma'am, you started using the FIT ranking? No. FIT ranking is basically the ranking given by this TransUnion Civil to MSME business units based on various factors. That is, they will look at the banking information through the bank statements. They will look at the financial and income information from the income tax returns. They look at the trade data from GST returns. That's what FIT. Okay, finance, income, and trade from 3 different sources. And using machine learning, they will predict the probability. They will predict the probability whether the borrower will default or not in the next 12 months. So this is going to give a kind of an assurance to bank. Okay, so if this customer is having a FIT rank of 1, there is very little chance he will default. So it is not purely based on history. Okay, CMR is history, past. But here the agency is telling the financial institution, in next 12 months, the chances this customer defaulting is very less. So how they will communicate that? They communicate that through their FIT rank. So the rank will be in the scale of 1 to 10. So if MSME is rated as FIT 1, it means they are rated as least risky borrower, and if it is F10, it means that borrower will default for sure. So this is a development, and a few banks have started implementing it, and it will come to almost like how CRISIL, when it came, it was adopted only by few banks, then it got applied to all. Same development is happening, and this is exactly use of whatever we say analytics, AI, artificial intelligence, machine learning, because FIT actually uses wide range of data. And how they give this ranking, how they say that this particular customer is rank 1 customer, how they say this particular customer is rank 10 customer. It's because of the large or big data they have. Their data says, out of so many thousands of customers, whoever have come in this range have defaulted. So if a particular borrower is going to come in 10, then he will default. So it is based on the data they have in place, and this is actually helping the banks to have more nuanced assessment. Not just looking at the credit risk, but looking at what? Bank statement, income, and trade data. This is one thing, and I also just want to touch on this ESG criteria. More focus is given for this nowadays, and in future more banks will be insisting this. So when I say ESG criteria, this is the criteria we basically use to evaluate a company, how the company is contributing to the environment, how the company is contributing to the society, and the governance. So what we do is, we basically look at three things. Yeah. So how the company is contributing to the environment, in the sense, what are the efforts that are taken by the company to reduce the impact they are creating for the environment. Let's say like reducing the carbon emission, the carbon footprint, or promoting the solar, promoting green power, okay. Similarly, on the social side, how they are managing the relationship with various stakeholders, let it be employees, suppliers, customers, communities, and on the governance side, how transparent they are, on the leadership angle, on the audit angle, on the shareholder rights, okay. This is something which is gaining momentum, and there are lot many training programs happening at the banker side as well to embrace this, to encourage this. Even I recollect State Bank raised a lot of funds to give loans for those units who are fulfilling this criteria. Okay, it means if a business unit is complying with this criteria from their point of view, they are eligible for loan as well. Okay, so how it works, let me try to give one or two examples, and with that I'll close. So I took this example, and to be frank, I used GPT for creating this example. Okay, Chat GPT, because I wanted to give a more relatable, more than the previous branch of things. I believe this will give more clarity. Look at this case, Eco Fabrics Limited. This company is producing sustainable fabrics from recycled materials. So this focuses on environment. They have implemented water recycling processes. They have introduced fair trade practices. So all this shows they are committed to environmental and social standards, and this is actually making them more attractive. And this is happening now. This is happening now because as a trainer, I interact with several other trainers within the banking industry, and there are frequent programs conducted to train their managers to identify business units who are focusing on ESGs. Okay, so this can be a value addition for you, not directly connected with the audit, but if you are on the financial consulting angle, or you can also educate your customers, clients to focus on ESG criteria fulfillment, so that it will make them more attractive for the lenders. Not only the lenders, even future investors. They'll be looking for ESG criteria if they are very much concerned about ethical investment. Okay. So with this note, I wish to conclude this session. I was able to talk a little bit on new age banking, and my focus was more on throwing some light on the credit processing and financial analysis practices adopted by the banker. Was this session useful?
Yes.
Useful?
Yes.
Thank you. Okay. Thank you so much. Thanks a lot. And now the time is 5:50. Very good. Thank you.